Thanks so much, Lisa. Greatly appreciate it. Audrey Chow-Friedman coming up on currencies and moments, and then Elizabeth Economy with us on China. Really looking forward to the great honor of having her with us today. What is important here is if you have Doug Irwin on, you've got to go to someone at Dartmouth who studied under the wisdom. Scott Cronin joins us right now with Citigroup. Scott, you've got to rewrite your equity view. How do you accomplish that this morning?
Well, I was working on it from a middle seat in coach last night in the flight to Chicago. So
Nice.
we've got a starting point here. And the starting point for the rewrite is more egregious than expected tariffs. So 20% plus tariffs. What that does, Tom, quite simply, is it rebases our earnings trajectory for this year. We have to assume a flat earnings year at this point for the S&P 500.
And where were you before, Scott? Where were you prior to that?
So we had been at 270. Consensus had come our way from 274 start of the year down to about 269 last week. We'd been in the back of our minds, factoring in a 10% tariff that negotiated down to 5%, which might have been a 1 to 2 percentage point drag on fundamentals, but was something that we could deal with because of the other factors coming into play. The extent that we're looking at now, at least 20%, if not higher. What that's going to do, we've been saying for some time now, the tariff issue from my approach is less about inflation. It's much more about margin pressure. And I think that's what you're going to be feeling as we go through the Q1 reporting period. Companies start providing some guidelines around how they're thinking about the current situation.
So, Scott, just so I'm clear here, you had been, and the market maybe had been discounting maybe a 10% growth in earnings this year. Now you think it's more like flat?
Yeah, so I think flattish is a good starting point, Paul. I think up 10% on the heels of a strong Q4 was where consensus and our top-down models were taking you as well. So I think that I said gets thrown out, right? And then what's going to happen here, it's going to become much more company specific in terms of how you see reactions. You mentioned earlier the response to Apple. So you're going to have a lot of these larger companies, the mega cap growth cohort, that at company specific level, you're going to find that their earnings influence is not just market cap impact on the market, it's also their earnings influence on the aggregate index earnings picture. And so you're going to see some dialing down to these expectations for sure. So I think flat earnings is a good starting point for now.
All right, that's clear. Scott, you're head of equity strategy at Citi. You guys talk to everybody around the globe here. Is there any call here to say, boy, I got an S&P futures looking down, 3-4% here. We're down double digits, peak to trough here. Is anybody saying it's time to buy the dip, or is there no call for that these days?
Well, I guess a lot of it depends on your time horizon, right? So up until today, we've been suggesting 5,500 is a pretty good level for waiting back
right
in.
now.
But we're sitting there right now, so we'll see how the day goes. But I'd also mention that is in the context of our bear case going into this year. We do a base bull and bear case for our S&P views. Bear case was 5,100. We think we got a pretty good chance at some point in here of trending towards that level. But from a longer term perspective, we're also have to acknowledge that we're probably looking at something around peak negativity as we go into the news flow and the price action today.
Scott, thank you so much. Scott Cronin on short notice. Get that report done. Yeah, he should be flying business class. I mean, I got to talk to Jim.
Yeah, I'm not buying the whole thing.
He's like coach.
He's flying first class for long.
He's probably on the Fraser Golf Street. Scott Cronin, thank you so much. Why are we talking to Audrey Chow-Friedman? We welcome her from Queen Victoria Street in London. We are because of the jump condition in the euro. I just did it on the Bloomberg. Audrey taught me how to do this. We're up 3.7 standard deviations strong euro. What does the instability of strong euro, Audrey, mean for Brussels, for London, and for President Trump in Washington?
Well, first of all, this is as much of a weaker dollar story than it is a strong euro story. You see, the dollar is trading lower across all of G10 currencies this morning, so it's not just euro-dollar. But certainly, the euro is now breaking through 110. And from a euro growth narrative perspective, it's not really what Europe needs right now. But I think it's as much of a cyclical as it is a structural move
Right.
back into Europe, and that's why at this point there's not much that can be done about it.
Audrey, Paul wants to get into your brilliant foreign exchange questions. I want to do a massive audible with you. Americans are like, okay, Howard Lutnick just said Europe is our enemy. They're cheating us. We heard it from the president yesterday. We love going to Europe and having Tuscany meals, or shopping in Paris,
It's some wine in
or
France.
walking the mountains, going to Europe,
Israeli and the
and
Lake
having
countries
Tuscany
of
meals.
England.
How will your Europe, Audrey Child Friedman, respond to the grievance of the White House?
Well, that's the big tricky question, and I think that's one of the reasons why you're seeing such a reaction in the market this morning, because in a way the tariff outcome was worse than expected for everyone, and we still don't have much certainty as to what's the next step here. What's the response from Europe, and how worse can it get from here? And until we get more clarity on that front, I feel that the markets, in the currency market anyway, has now shifted into playing defensive views and defensive trades. And right now, in the current context, that's negative for the dollar. So that means that until we get more clarity as to what's coming next on tariff in terms of retaliation, you're probably going to see euro dollar continuing to push higher, dollar Swiss continuing to go lower. And I'm talking about, we're probably going to break for 85 and going towards 80 on dollar Swiss, so essentially lower. And dollar yen, continuing also to move lower. We were at 150 at the beginning of the week on dollar yen. 145 was the target I was thinking about, and that was probably far too conservative. So now we're going to go towards 140.
View from 60,000 feet. Audrey Child Friedman, there has been a, Paul, help me here, post-pandemic, even pre-pandemic, 4 or 5 year bet of building up massive asset bases, massive bets, the certitude of American exceptionalism, the certitude of growth, the certitude that Audrey needs to go to LVMH to find something new. Audrey Child Friedman, are we busted this morning where we're breaking it and there'll be financial instability as witnessed by these currency moves?
I think it's probably still a little bit premature to conclude that that's going that way. But the current context, the price action is really not very reassuring. And for the time being, the dollar has lost its appeal. And, this is the next theme that we're all going to be talking about, is to what extent the phenomenon of de-dollarization that started a few years ago and that has been gradual could accelerate if the global trade war ends up in a rerouting of global trade, and that means that suddenly demand for dollars globally will be reduced further. That's a big question that we have to answer.
Audrey, it's 2:15 in London. You've had most of the day to talk to your clients in Europe. What are they saying today?
I think it's, to be honest, Paul, I think the kind of de-dollarization and loss of appeal for the dollar is something that has started.
Hello, this is DrPaulCottrell, and we are doing a live stream on Rumble, YouTube. On YouTube, I also have the dashboard of the market. It's all real-time telemetry. We're simulcasting on X Spaces. The links are in the description box. If you have a question or you'd like to give me your opinion on the news that we're covering today, especially what's going on in the financial markets, please ask for the mic on X Spaces and you can be live on the show. This is an interactive program, so please join in and interact with this platform. Now, what I would also like to do is tell the audience we're live streaming on my website, the-studio-reykjavik.com. You can pick either version, the full screen version without the telemetry or the video feed with the telemetry. It's up to you. Thank you for joining. We are doing this live stream on April 3rd, and the markets in New York have not opened up yet. The future market is pretty bad right now for the S&P 500, and the Asian session markets, the equity markets were down. So just, keep that in mind here. I'm not sure why that. So thank you for joining. Please help support my work by making sure you subscribe to all my channels. I have 7 channels. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. Please make sure that you subscribe to all those channels and ask your social media to follow me. Share the links. I need to accrete more followers so I can reach a larger audience to help to explain to them on how to improve their health and wellness. All right, with that said, let's go to Bloomberg here.
Currencies, the dollar actually headed for its steepest drop in more than 2 years. The Bloomberg Dollar Spot Index down about 2%. Then you have the 25% tariffs on auto imports that took effect. Mercedes-Benz, Volvo, they're considering boosting U.S. production. Mercedes-Benz off about 2% in Germany, Volvo off about 4%. Volkswagen actually says it plans to increase the price of its vehicles that are shipped to the U.S. That is off more than 2% in Germany. Ford down 2%. General Motors down more than 2%. Also feeling the pressure, can't forget financial institutions. JP Morgan, Bank of America down more than 3%. You have Wells Fargo, Morgan Stanley, Goldman Sachs, Citigroup down more than 4%. For on-demand news, 24 hours a day, you can subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Tom.
So I got ducky bumps. The quality of the conversations today. Lisa Mateo, stock movers, and all. Tony Hatch was brilliant out of Harvard with all of his great work in the trucking industry as well. We got Elizabeth Economy coming up, definitive on China, where the river runs black, years ago. But this is really special.
Yep.
I mean, what happens is you're a British lad,
Yep.
and you end up at the Belmont Hill School in Boston.
Solid.
I mean, you should have seen him going down the ice in that. John Arthur's joined us right now. And John, you take us back with your incredible scope and scale.
Yes.
With something I remember. Gullickson and McEnroe, this is McEnroe, he's absolutely mental, like 1981. He's at Wimbledon. John's in the 4th row with the Duchess of somebody,
Yep.
and he's got strawberries and cream going. And McEnroe goes, "You cannot be serious." And it was the way he said it. I can't say it like that on radio. What are you writing after this great essay this morning on John McEnroe in this moment?
Well, I mean, it certainly doesn't work with a British accent. It's "you cannot be serious," which more or less was exactly what went through my mind. And looking it up, John McEnroe was actually born on a US airbase, but he was brought up about a mile away from Donald Trump. They're both sons of queens.
That's right. That's right.
So there you have it. As it stands at the moment, it's as with everybody else, it's very difficult to know where to start. I think the single most significant thing that's happening today is the dollar. Everything, I certainly would have told you a month ago that if Trump's tariffs came in at the top end of expectation, that would mean a stronger dollar. The fact that it's a weaker dollar suggests something about confidence in the US, about its ability. The level of the dollar and its functioning as a reserve currency aren't necessarily linked. They're separate concepts. But in this case, the fact that so many people are pulling money from the States in reaction to news that should strengthen the dollar has to be pretty alarming. I think. Okay, one other point I'd like to make to the conversation.
Please.
Just for now. These tariffs have been completely calculated on the basis of trading goods deficits. The idea is that if we have a deficit with you, that must be because you're exploiting us, not because you're making more stuff that we want to buy than we're making that you want to buy. And obviously because America spends more than it has, that means that there's a deficit in most countries. What hasn't been grasped to the same extent is that when it comes to capital, America gets a heck of a lot of it.
Yep.
And capital can move far more swiftly than goods. So if it's not just a question of goods coming home, that everybody just making their own stuff for themselves, but it's also a case of capital coming home,
Right.
then the US has so much more to lose than everyone else.
This is beautifully explained. John Arthur's with us here, and let's go there right now. I'm thinking of Simon Wren Lewis at your Oxford, okay?
Yeah.
Where we end up going back, and this is, Paul, this is almost like Dickensian. It's almost like 19th century English John Authors speak. Everybody thinks it's the same way. This is in the zeitgeist, John Authors, this morning, that we don't understand the fire we're playing with, and that the servitude of American...
I totally disagree with them. Why? Because what's going to happen is that other economies are going to start to tank because we're not buying their goods because of the tariff problem, and they're going to go look for a safe haven. And because we are the risk-free rate for the world, it's going to boost the U.S. economy, not hurt it. What they're doing is promoting some sort of transnational globalist thing. Oh, these tariffs are bad for globalization, and people are going to start moving money out of the country. Well, not necessarily when the other countries, like the European Union, other regions of the world are going to start going into a recession. No. United States is actually going to be the game in town. Do not take my advice. Do not invest in emerging markets, and do not invest right now in foreign equities. You're going to hurt yourself. Please go to my store, the-studio-reykjavik.com. It's the-studio-reykjavik.com. The link is in the description of this video. And get the Max 14 or the Max 35. Take it every day. Take a teaspoon a day. Swish it in your mouth. Gargle 30 seconds or so, and then swallow it. What's going to happen is you're going to improve your oral cavity, your oral pharynx, improve that epithelial lining and the mucosal barrier, and boost up your immune system. So take the Max 14 or the Max 35. Take a teaspoon a day, every day. If you're not feeling well, take a tablespoon or two a day. It's the first pillar of a core protocol that I have. And that 4 pillars within the core protocol, the first pillar is the Max 35 or Max 14 to boost up your immune system. The second pillar is C60 to soak up free radicals. The third pillar is to take turmeric, ashwagandha, and lignans to bring down inflammation and boost up your immune system. There's also a dual benefit. It'll help your cardiovascular system too. And the fourth pillar is to boost up your energy levels and your metabolism with Boomer Boost. That's a great core protocol to build off of to get healthy. So please go to my store, get the Max 14 or the Max 35, take a teaspoon a day, every day. So what you're going to hear in Bloomberg is just this push that, oh, there's going to be tariffs and that money's going to be pulling out of the United States. No, I don't think so. What's going to happen is other regions of the world are actually going to start to deflate, and investors are going to have to move their assets to a risk-free or a low-risk environment, and that's the United States. It has always been that way since World War II. It hasn't changed. They can create all the rhetoric in the world about the BRICS and all this stuff. The United States is still supreme when it comes to markets. All right, now the S&P 500 market hasn't opened up yet. The S&P 500 at this moment in time is 5,670. The futures market is down for the S&P 500. Now, what is happening in the currency markets? The USD Japanese yen is trading at 145.71. What did I say months ago? If the Japanese yen starts to strengthen relative to the USD, that's a sign that the markets, there's stress, okay? VIX is now trading at 27.30. VIX is elevated. It's going to probably hit 30 or more. So the equity market is going to plummet. Now the Euro USD trade is at 1.10. So right now, US dollar is weakening. All right, at this moment in time, and oil is trading at $66.66, and Bitcoin is down. The ETF is trading at 18.93. All right. So with that, let's oh no, it's trading at 17.83. I'm sorry. Market's just opened. The S&P 500 is at 5,477 right now. All right. Now it's really important to understand I went and did a fib sequence of the S&P 500 and what the support levels were. All right. The first support level is 5. If you're looking at SPY, 550. SPY is the ETF for the S&P 500. 550. All right. So that's like 5,500 for the S&P 500. So that there you have that support level. You break that in the close, then the next support level is going to be about 515. All right, for SPY. Now, the next support level, if that breaks, is going to be 481. All right, so that means that it's possible that over time, as we're moving in through July, that we may see a 500 SPY or 5,000 S&P 500, maybe even a 4,810 for the S&P 500. It's possible. All right, but those are your support levels that you want to look at. 550, 512, 500, and boom, the 480.
Tesla down 5%, same for Nvidia, Google down 3%, Amazon down 6%, same for Meta, Microsoft down about 2%, and Apple down about 7%. That is your Bloomberg opening bell report. Paul and Tom.
Lisa, thanks so much. More data checks through the hour. A little bit of an ebb here off the carnage, but nevertheless, we'll monitor it tick by tick. We've got a down negative 2.8%, down 1,268 points. Authors was here. Gura was with Authors last night. They were both working at midnight.
It's amazing, and I appreciate getting a few minutes of John's time because, again, we're seeing it in the market response here, Tom. Those tariffs were really.
But the difference is Gura's staying at the Motel 6 in Midtown.
Exactly.
Authors
The S&P 500 down 3,
hotel.
over 3%.
He knows how to roll.
Thanks to John Authors for being with us this morning. Right now, an important interview. We're really pleased we could get him on. Joe Lavorgna joined us right now. He was with the first Trump administration. I'm sure you noticed the exact geography of the press conference yesterday. Joe Lavorgna, thank you so much for the time yesterday. How is Trump 2 different from Trump 1?
That's a very good question, Tom.
Bitcoin has broke 82,000 right now, and we're at 5,490. So it's looking like you may get some buyers in the S&P 500. It's going to be a volatile day today. Now, VIX, though, didn't go above 27. It dropped back down to 26. So we'll see what's happening there. You may have had some algorithmic trading buying into the market, triggering. Because remember what I said, if you have a strong resistance point and there's a consensus in the market about that resistance and it breaks, then what will usually happen is the algorithmic traders will come in and start buying at that break. And then you're going to start seeing that the market may start doing a little bit of a upward trend off of that low. But because this is going to be a volatile day, I think this is going to be up and down. But we'll see. We'll see what happens. But I think that the algorithmic traders actually it kicked off a trigger to buy once it hit the 4,000 or once it hit the 5,475 mark, because that was the low in the open.
For his longest serving aide, I think, was quite clear last night, and he said this is they're trying to change things. It's going to have a multi-decade change in terms of global trade flows.
That works so well in the United States for 6 years.
The reason why they're changing it, is because it didn't work so well for the United States for 60 years. Because it gutted our manufacturing, and now you have young people that can't create families, can't buy a home that's affordable, and their opportunities when they come out of high school or come out of college are less. So it's not working. It worked for the wealthy, it worked for the transnational capitalists, and it worked for people that were living on the margins that were going to just buy cheaper goods. But the middle class got gutted. And what it is you're starting to see the anger. You're starting to see the anger within the transnational capitalists, like, the people that are on Bloomberg, all right? You're starting to see the anger because what's their Achilles heel? Like I said, you stop buying, or you start creating problems with their global infrastructure, and their stock prices start to go down. Now, most Americans, they have a little bit of money in the stock market. You may lose 30% of your money, but if you look in absolute dollars, what are you really going to lose? Most people don't have $400,000 or $500,000 in a 401k. All right. But transnational capitalists are playing with millions, if not billions. So who has more to lose? You, the middle class, or the multinational capitalists? Pay attention. I'm not wrong on this.
U.S. real income creation. So if you look at basically how did President Trump get in office in 16, it was largely because there was virtually no real income growth from 2000 to 2016.
Right.
And the first 3 years of the Trump term, you have very large gains in real household income across the spectrum. So exceptionalism is a broad term. I would not average it over that long period.
Okay, Joe Livornia with us here this morning. Thrilled that he could join us. Elizabeth Economy somewhere out there. We're going to get to her. We've really ignored the Pacific Rim, and to have Dr. Economy with us is definitive. We welcome all of you. The Dow negative 1,100. Joe Livornia is looking at him. He's driving the market up at least. We had a VIX of 26. Livornia rocking us to a VIX of 26.42. 10-year yield is the morning litmus paper, 4.04%. It was worser an hour ago. Joe, here's the money question this morning.
Worser is not a word.
And some of our team, Mateo hasn't slept. I know Bar got 8 hours, but that's Michael Barr. Joe Livornia, it's simple. I got Besson of Yale. I got Hassett of Penn. Solid. I got Joe Livornia, Beyond Solid out of Vassar with Deutsche Bank. These are legit academics. I have nobody in the racket talking about this as having a legit theoretical foundation. The formula that James Surowiecki came up with first out at the Atlantic, and of course, iconic at the New Yorker. Josh Wingrove at
they're trying. These globalists are trying to push a economic theory that globalization is so great for Americans. The reality of the situation is our manufacturing was gutted. That means your military prowess is less. That means your debt to GDP ratio will go up. So if you really want to have Americans employed and have innovation only comes through making stuff. You can't innovate if you're not making things. All right? Now, maybe it's digital things, but you have to make things. And then you improve the processes and you improve the technology and the speed of it and the accuracy. All right? But you have to have manufacturing. You have to have some sort of making of things. If you outsource that, you lose your innovation. So what it is you have a bunch of, stuffy heads that are very, very transnational capitalists with their bow ties, and they'll start quoting theories from economics and all this that, we're hurting America, but you just look at the empirical evidence. The empirical evidence is showing, do children that are kids, I should say, or young adults coming out of high school and out of college, even Ivy League college, do they have a ability to have family creation and build wealth and get a good job out of high school or out of college? And the answer is no. Compared to what the Gen Xers or the baby boomers have. So where the hell do they get off trying to quote some sort of economic theory that this is good? Because what it really has happened is that you've had countries taking advantage and creating barriers, and they're not really even following proper trade agreements because they're protecting their own industries. These countries are protecting their own industries. Now, we do that too, but the reality of the situation is that to really have free trade work properly, you can't put artificial barriers up. but no one's doing that. So don't say that free trade's working, because we don't have free trade. There is no such thing as free trade because there's barriers. So what you really have to have is fair trade. And we don't have that either, because we don't have reciprocity that's going on between the trade. The economic theory is broken.
That works, in my opinion, for high value manufacturing, things like semiconductors. That's obviously not going to work for lower value added things like textiles and things of that sort. So if you want to develop the manufacturing base in sort of these newfangled high tech industries, I would
totally wrong. Totally disagree. Totally disagree. If you have manufacturing even on lower end goods, all right, let's say of fabric manufacturing, when you build up that economic clustering with the fabrics being created in the United States, you're also purchasing the cotton, right, from the farmers that are from the United States. So you're helping the farmers. You have manufacturing to make the fabric. You have an economic clustering that's taking place where you have designers using that fabric to create clothing. And so what happens is now you have seamstress making the actual clothing, right? Because you have to make the fabric first. You got to, you grow the cotton, you got to make the fabric, and then you got to have the designers, and then you have to have a staff, a production staff that's cutting the patterns and sewing these things together. And then you have a distribution, either online and or brick and mortar. But what happens is it allows these kids that are coming out of, let's say, FIT, the Fashion Institute in Technology, or other design houses, design schools, they can build businesses. Do you think that they can do that when you have everything shipped over to China? No. The answer is no. These clowns have never built anything in their life. They've read a book, they made money in the market, but they have no idea on what it really means to build a business.
Canada. We're looking at Mexico. Elizabeth Economy, since she was a student at Michigan, has been looking at China. Her River Runs Black stopped academic traffic when she issued it off of her thesis at Michigan. Her book, The Third Revolution, was my book of the summer a number of years ago. Another book, A World According to China. She's someone that's done great duty for America with Raimondo at Commerce here a few years ago. We're thrilled that she could join us now from Stanford University. Dr. Economy, Beijing takes us in. How will they respond?
Yeah, I mean, I think they've already started to respond. I think they clearly stated that they want the Trump administration to rescind the tariffs. But beyond that, they put a stop measure on all Chinese investment into the United States. Not that that's such a big deal. It's only a couple $2 billion last year, I think. So it's not that meaningful. But I think we can expect, that they have developed their retaliatory toolkit to a very fine degree. So we will see some reciprocal tariffs. We will see some punishment of U.S. companies, investigations, antitrust investigations, things that they'll just create to cause problems for U.S. companies. We may even see some boycotts of companies that sell their products, consumer products into China. Probably, again, some new restrictions on critical minerals, licensing requirements,
right.
Potentially, they have a lot of different things that they can do, and we can expect to see the full range of them.
Some people are writing this morning out of Yale University that these are basically a level of tariffs and harm back to 1909. Dr. Economy, let us go back not as far, 1911. China was a Qing dynasty. There was a revolution. There was a failure of their democracy to stagger through 10, 20 years to get out the Mao. What is the political stability right now of the Xi regime across China, given this unilateral shock from Donald Trump?
The Chinese have a pretty high capacity to endure pain, and the truth is that what the United States is doing will simply enable Xi Jinping to rally the troops behind him. And this is not even something that's just targeted at China. It's a Trump, worldwide effort. And that means that Xi Jinping can paint the United States as sort of an unstable partner, an irrational actor. And so it's not, it will hurt China economically, no doubt, particularly at the low end, manufacturing, some of the e-commerce exporters like Shein, they will clearly take a huge hit. This is not coming at a good time for them. Their economy has been struggling, haven't, rebounded yet to pre-pandemic levels of consumer spending. They're doing their best to try to, improve that, but it's been difficult and will continue to be difficult. So it's tough, but they will soldier through this. And Xi Jinping is already out there. He was just in Japan and South Korea talking about making more progress on the free trade agreement, talking about working together with them on supply chains. He's heading off to Vietnam and Malaysia soon. So he's going to take advantage of what the United States is doing globally to improve China's position, its trade position, its economic
Now think about this.
globally.
Okay,
He's gonna try
she's saying that China will clearly take a huge hit with this tariff. So why do you have economists saying, oh, there's going to be lots of money flowing out of the United States and the dollar is going to weaken? You know what's really going to happen is that you're going to have the Euro whiners pulling some money out of the United States. But what's really going to happen is that the Japanese yen is going to strengthen against the US dollar because that is a risk indicator. Like I've been saying for a long time. I've been doing this for a long time, all right? And I'm telling you, when markets have problems internationally, the yen strengthens. And usually then the VIX goes up and then your stock, your equities will go down. So if you're going to have China and Europe get hit hard, if you're pulling money out of the United States for FDI, if you're selling treasuries, where are you going to put your money? Where are you going to put your money? The two biggest other economies, Europe and China, they're having problems selling their goods to their biggest customer, the United States. These economists are idiots. Now, she's right about China.
On Pacific Rim, but the unspoken is the worry about Taiwan. The president goes after Taiwan's semiconductor. We've got 2 military bases on the north tip of Luzon Island in the Philippines, and on and on. Should our listeners worldwide have a concern about opportunistic Beijing taking out Formosa?
No doubt, there should be concern. I mean, Xi Jinping has said that unification of Taiwan is one of his 14 must-do items for the great rejuvenation of the Chinese nation. We've seen a dramatic ratcheting up of Chinese military exercises around Taiwan. They've clearly been practicing to do a blockade. So I think we definitely need to be concerned. And President Trump has been very non-committal about Taiwan. I think his administration is split. We have, in terms of whether or not the United States would come to the aid of Taiwan, work China to take military action. I think National Security Advisor Hegseth and Secretary of State Rubio have both been pretty firm in their commitment and overall pretty internationalist in terms of our Asian allies. Whereas I think, Elon Musk has likened Taiwan to China as Hawaii to the United States. And President Trump's moves to get TSMC to do these major investments on top of Chips and Science Act, his call for Taiwan to spend 10% of its GDP on defense, which is, crazy. But nonetheless, they can be seen as, in two different ways. They could be seen as President Trump saying, you do these things, and that's enough to satisfy us that you're taking your security seriously and we will be there for you. Or they could be seen as President Trump actively trying to reduce U.S. dependence on Taiwan semiconductors and basically signaling that we're not going to come to their aid. So everything's up in the air.
Paul, get one more question in here. I mean, she's a trooper for being with us from Stanford this one. Get one more question into Dr.
Elizabeth, to the extent that the U.S. is backing away from the global stage, are Asian countries on, I don't know, Vietnam.
It's the wrong way to phrase it. This guy is such a globalist bullshitter, all right, who didn't do so well and had to go work for Bloomberg when he was working in banking. You know what? The United States isn't backing off. What the United States is doing is saying, we want to build stuff here. We want to sell our stuff in the United States and around the world. We want to reduce these artificial barriers that have been created. And guess what? When you are well-heeled and have lots of money like Goldman Sachs and BlackRock, don't you think that you can pull strings with these countries? So what they do is they pull strings and go, well, we want to, we're going to invest in a plant in, let's say, Vietnam. All right. So for you to protect your industry, we'll allow you to increase your tariffs, but please let us build in your country so we can ship it back to the United States and make a bazillion dollars because we've reduced our expenses and the market will appreciate the stock. That's what's going on. That's what's going on for the last 35 years. Free trade doesn't exist because if free trade existed, there wouldn't be tariffs from anyone. Now, remember where this started, and Bloomberg will never say this. The tariffs didn't start with the United States. The tariffs started with these countries that we're adding tariffs to. If they went down to zero tariffs, they wouldn't have had a problem. So who really started this issue? It wasn't the United States. So is the United States disengaging with the global world? No, the United States is disengaging with the current economic regime, the global regime. But it's not disengaging from the world. It's just, it wants to change. It wants to create a real free trade environment where we build and we sell. And if someone else builds in another country and they sell a better product, then the consumer makes the decision, not some artificial economic barrier that takes place through subsidies or through tariffs. Subsidies and tariffs are artificial barriers to really have true competition.
Thank you, Lisa. You almost duty today. Just thank you so much, Lisa Mateo. Anna Long joins us now from Bloomberg Economics. Huge splash.
And you can tell when these globalists get really upset because when there's a movement by Trump and it hurts their portfolio, which it will, this is going to be a short-term hurt on people's portfolio, especially in equities. They get all upset. It's all Trump's fault. No, what it is we've let a 35-year arc of shipping American jobs overseas and importing deflation and having the rich and the well-heeled take advantage of the labor arbitrage between the United States and these other countries. That's what's happening. This is an important individual. It's important to listen to.
Will still be pretty solid. We're expecting a 200,000 gains in our payrolls, but I think we're going to start seeing some low numbers in April. Mm-hmm. And the unemployment rate, we are still expecting to tick up a little bit tomorrow, but we are now expecting the unemployment rate to hit 4.8 by the end of this year and above 5 next year.
Wow. So are those double wow?
Why is that wow? Why is that so double wow? We've been overemployed in the United States relative to the inflation. Remember what I said? If your inflation is above target, like 2.7, and you have unemployment at 4.1 or 4.2, that's below the 5% natural unemployment rate. That means that if the Federal Reserve cuts rates, which they did in 2024, that's inflationary. So the inflation that we're actually seeing right now at the tail end of the Biden administration and the first couple of months of the Trump administration has nothing to do with tariffs. It has everything to do with bad Federal Reserve policy. monetary policy. They cut rates too early because inflation was too high and unemployment was too low. So they're going double wow. Maybe we have 4.8%. You're still below the natural unemployment rate of 5%. Stupid.
0.8%. The VIX stable, but give me a couple minutes on that 26.68. Anna, what's it mean for the real wage? We have Danny Blanchflower tomorrow from Dartmouth. Does our paycheck evaporate?
Short term, yes. Short term, yes.
Exactly. That if the tariff is not showing up as higher prices, it means that firms are taking a margin hit. It means that EPS on equities market should be revised lower. The stock market is going to take a hit. Consumption is going to take a hit. And
what's wrong with, instead of having 15% multiple on your earnings, you go down to 12%, or 12 times. All right. So if you have 15 times earnings, EPS, your earnings per share, all right, and you have a multiple for your stock price, all right, instead of having 15 multiple, maybe you should have 12. Big deal. Maybe the market is actually a little too hot. Oh, that would mean that the Federal Reserve actually pumped money into the system in 2024 that they shouldn't have, called inflation. And that hot money goes into the market and making other people rich that have lots of shares. Meanwhile, the little person lost their actual buying power when they go to the grocery store. Now do you understand why they're so why the well-heeled is complaining? Like I said, the Achilles heel, don't back off. Don't buy these new products, especially consumer goods, like cars. Buy it used in the next year and let the globalists feel the pain. That's their Achilles heel.
Kind of data they are and policy mix they are faced with. They could not cut rates even as the unemployment rate climbed beyond 4.5 because inflation expectations are pretty high and they have to take some signal from that.
And I got a minute and a half left. And all I could think
I just said.
I saw his name yesterday, and I remember this magnificent book. It was my book of the summer a million years ago. Luigi Zingalis in Chicago, an Italian, writing a brilliant book on America, A Capitalism for the People, recapturing the lost genius of American prosperity. Anna Wong of Chicago in Bloomberg Economics, how do we recapture our American prosperity?
I think the first thing to recapture American prosperity is to get our fiscal house in order. Yep. And it's I know everybody has talked about all the dark things from the tariffs, but one slight silver lining is the drop in 10-year yields. And a lot of the U.S. fiscal debt, Treasury debt, is going to be rolling over in the third quarter this year from a very low rate of 2.5% from when they were issued during the QE to whatever rate 10-year rates will be in the third quarter. And so if 10-year yields were to drop to 3.5% or 3% in the third quarter, it actually would lower the trajectory of the interest rate expense in the next year. That's the one little positive.
No, there's also the manufacturing that comes back to the United States. Oh, and long term, your debt to GDP ratio is going to go down. So it's a short term and a long term analysis. And of course, she only shows the short term.
Which continue tomorrow. What was your takeaway from the madness of the morning?
I think the takeaway is now people are adjusting their models. There's numbers they can put into their models, whether it's economic growth, whether it's earnings, a forecast. You now have some certainty. And granted, that certainty is maybe not what we were looking for, maybe a little bit more extreme, but if nothing else, you have some framework.
My difference within this and other crises we faced, and I'm going to editorialize and say this is a crisis, is we have social media and the transfer of information now.
Yeah.
It's no different than the war in Ukraine.
Yeah.
They're destroying people on the shores of the Black Sea. We knew about it in, 12 minutes?
Sure. Yep.
James Sirwicki, major shout out the Atlantic, coming up with a formula
please go to my store, the-studio-reykjavik.com, and get the great products that I offer. And you use discount 5 and you get $5 off. I have a dual purpose deodorant that will help to detoxify your body, but you use it as a deodorant every day. You can get it in citrus or also in peppermint, lavender, and tea tree. It's for males and females. It's a very high quality deodorant. It's made from essential oils from the Himalayas. And it has no aluminum and no baking soda. Very high quality ingredients, all natural, for males and females. It's a dual purpose product. Use it as a deodorant and it'll help to detoxify your body. Please go to my store, the-studio-reykjavik.com. Get the deodorants that I have, get a couple bars for your household, help support my work, and also help to support your health. It's about a holistic approach, detoxifying your body, taking the right supplements, working out, getting proper sleep, filtering your water, staying away from processed foods as best that you can. And what you'll notice is that all your organ systems are going to start performing better. All right? And if you do this on a regular basis, you're actually going to reduce inflammation. You're going to reduce your free radicals. And what's going to happen is that you're going to start seeing that you're aging slower compared to your peer group. Please go to my store, the-studio-reykjavik.com. My protocol absolutely works. All right? So please go to my store and help support my work and get the great products that I offer. If you spend $150 or more on any order, you will get a free gift, all right, until supplies last. So please help support my work and help support your health. It's a dual win here, all right? So get the deodorants, very high quality, made from essential oils from the Himalayas. You're not going to get a better deodorant from the grocery store or from your drugstore. Trust me. So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off. I also want to talk about, because we're going into the allergy season and there's a carryover from the cold season lingering, all right? It's really important to get lozenges and drops for your household. Have some at work, have some at home. You never know when you need it. And once you have that irritation in your throat, take the lozenges right away. It's made from structural nanosilver. You get 21 lozenges in this bag here, and you get, the flavors are elderberry zinc, and you also can get it in manuka honey. All right? You get 21 lozenges. The lozenges are a little bit bigger than the drops. Now, for the drops, you get 100 in each bag. And I have 3 different flavors. You can get it in honey and lemon, cherry, and also in blueberry. So get a couple bags or a few bags for your household. Right when you have that irritation, take it right away. You want to mitigate it, because if it festers, it's going to take like 2, 3, 4 weeks for your body to fully heal. And when your body is remodeling and healing, it can't focus on other things that your body needs your immune system to heal. All right. So if if you have this happen to you every 3 times a year, you're spending about a quarter of your year either with something benign, some sort of irritation and infection benign, and taking 2 to 3 weeks after that to heal the tissues. So a quarter of your year, 20% of your year, if you're sick, or if you have this problem 3 times a year, which most people in the United States do have, that's aging you, because you're losing 25% of the year of helping heal your other parts of your body, because your system is focused on the immediate issue. So it's really important to mitigate that irritation right away. All right? Downstream effects, even if they're benign, even if they're mild, do have ramifications when it comes to aging. Please go to my store, the-studio-reykjavik.com. Get a few bags of the drops and the lozenges. Have them ready when you need them. Trust me, this year is going to be different. And, by the way, there was some strange stuff in that fog. All right. So, okay, with that said, I want to take a look at what's going on with Live Now. I'm not sure. All right, let's go to Al Jazeera. Then they're talking about their perspective on the Trump.
Because of a global trade war. And that is exactly what is threatening at the moment as the measures introduced by President Trump sink home both domestically and internationally.
Okay, thanks, Mike Hanna, for that update from the White House. The US stock market has dropped sharply in early trading. Financial analysts had been waiting to see how the domestic market would react after Trump's announcement of those sweeping tariffs. Well, Kristen Salumi is live for us in New York. How are the US markets reacting then?
Yeah, it's a rough start to the day. It's expected to be a rough day. All told, the Dow Jones Industrial Average plunged more than 1,300 points after the opening bell. The S&P 500 is expecting to see its worst drop in 2 years today. The multinational companies in the stock indexes are doing the worst. Not surprisingly, Apple down 8%, Nike, the shoe and clothing manufacturer, down 12%. Also suffering are these companies that rely on cheap imports like Gap, the clothing retailer, the Dollar Tree, that rely on cheap imports from abroad. The S&P 500 being down so much is really telling because this is the stock index that includes the 500 largest publicly traded companies in the United States. And the thought is that the S&P will enter into what's known as correction territory today, a drop of more than 10% from the market highs. And the S&P has been hovering and has dabbled near that 10% mark in recent weeks with all the uncertainty around tariffs. Now it looks like it's definitely heading. The expectation is that it will solidly enter correction territory as a result of the latest turn of events. With all this volatility, investors yesterday were a little more optimistic. The markets closed up a bit. The expectation, I think, was that the tariffs would be more uniform and not quite as high as they were. So we're seeing very sharp declines today.
And Kristen, I think just a day ago you were in Chinatown getting reaction from people. But what does this mean for ordinary Americans across the country?
Yeah, it's a great question. The stock market does not represent the U.S. economy as a whole, but about 60% of Americans do have investments in stocks, most of them through their retirement savings plans. Of course, investors skew.
And if you're in your retirement savings plan with your employer, you're in the long haul, unless you're just about ready to retire. And so this is going to be a blip on the radar. It's not going to matter. All right. But big money is afraid. The Achilles heel is the big money. They hate people chipping away at globalization because they've set up their portfolios in such a way where they benefit from the labor arbitrage. It's time to end that. The economy in the United States is not as healthy as it could be because of these 30-year arc of unfair trade practices that are happening around the world. And if we don't bring back manufacturing, our military prowess is going to be lacking, and we're not going to have the jobs and the economic clustering that we need for the next generations to come in and build the skills that they need to have families and to build equity and purchase homes. So we need to do this to save the future generations. It's very important. We can't keep on going on this crazy train.
Negative impacts due to steel and aluminum pricing, with the additional tariffs going into China and a lot of the building type materials, electronic equipment, that type of thing. I would expect to see some additional impacts there.
All right, very good. Steve Miller, thank you so much. We appreciate that. Steve Miller is the chairman of ISM. zooming in from Aledo, Texas, which I just popped it up on the Google Maps, a little west of Fort Worth, Texas. Fort Worth is one of my favorite towns in Texas. It is cowboy,
Cool.
big time.
Do you have a cowboy hat?
I do not have a cowboy.
I
do not have a cowboy.
both.
Oh, you do? That's
I
pretty
do.
sassy. All right, we have markets selling off here, the S&P off and the NASDAQ off across the board. Let's go to John Tucker and get a Bloomberg Business Flash for a reset.
All right, this Bloomberg Business Flash being brought to you by IBKR. Will the U.S. Consumer Sentiment Index exceed 70 in April 2025 at IBKR Forecast Trader? The yes was recently at 29%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, May 13th. You heard Steve there mentioning the services employment for ISM. Again, this is down to 46.2, below the 53 that was expected, and that signals contraction. As he said, the lowest drop since the second month of the pandemic. Right now, I'm going to start with the Russell 2000. It is down 5.3%. And when you chart it out from its peak, it is
almost 4% down on the S&P 500.
Close to 21%. Remember, these are the small, medium-sized enterprises, publicly traded companies. It's the company down the street, on Main Street from you. The Dow Jones Industrial Average down 1,500 points. This is down 3.6%. The S&P 500, 4% lower, down 223 points. Tech heavy NASDAQ 100, down 853 points. That is down 4.4%. Among the most actively traded, some of the stocks that are getting hit the hardest, those that rely on Asia for their supply chain. Yep. Right at the top, Apple, those shares, they are down 9%.
All right, so the VIX index has spiked again. It's back up to 27.6. The Japanese yen is trading at 145.6. That's sign of risk in the global market. And Bitcoin ETF long is trading at 17.82. So Bitcoin is trading lower. And the Euro USD is trading at 1.0. So US dollar relative to the euro is weakening. But Treasury yields are going down. So what that basically means is that people are buying treasuries. So if that is the case, then where's all this money flowing out of the country? Because it's not. Because what's going to happen when this news gets digested in a few days, what's going to happen is that the other markets, other country and regional markets are going to be faltering, and they're going to have to invest in the United States. We are going to be the risk-free rate of the world for the near future. So, meaning our lifetime.
And Paul, to me, the superlatives in most of the stocks in the market are unreal that we are seeing today. So, I want to take a look at some stocks on the move. We're joined by Bloomberg's Isabel Lee.
It's going to be a major sell-off, and then there's going to be
All right, let's kick it off
buyers
here
that come
with
in.
Nike. Talking about superlatives.
Shares are edging lower by 13%. That's the lowest since November 2017. So really, we have European sneakers, clothing, and just jewelry plunging amid a shock to supply chains. I mean, Nike, for instance, they've increased their reliance on factories in Vietnam and Indonesia. That's after President Trump targeted China with tariffs during his first term as president. And now Nike produces 50% of its.
Yeah, what's wrong with making some of those shoes in the United States? There are actually courses within design schools, industrial design schools, where you take a course and you learn about the materials to use and the CADing and the design of and manufacturing of shoes. It's time to bring the jobs back.
Or S&P futures, I should say, at 54.81, just breaking below that key mark support level. So you're going to see some more speed to the downside. What else are you looking at, Isabel?
Apple, again, another superlative. Shares are falling by 9%. They're erasing around $300 billion in market value. So their supply chain, as we all know, is also leaning heavily towards China. Shares are slumping, and even after they've really had this years-long effort to insulate themselves from the trade war and the supply chain disruptions, it didn't really work out because they produce other things. Their other manufacturing centers are in Asia. For instance, India is where they build iPhones and AirPods. Vietnam is where they make AirPods, iPads, Apple Watches. Malaysia is where they make Mac computers, and the list goes on. And today, Apple conducts really little to no mass production in the US. So they're also one of the biggest hit in this tariff war.
What's so interesting to me is that we kind of knew things were coming, and yet still the dramatic slide in some of these stocks is quite staggering.
I've never seen my inbox look so pessimistic. I haven't seen one note. Maybe I haven't clicked on them, but really everything is just really gloomy.
And let's round it out here with GM.
So GM, shares are edging lower by 3%. They were fluctuating between gains and losses, but even Ford. But I think in general, President Trump's 25% tariff on imported cars are really affecting the automakers. In fact, we have Stellantis, which is a Jeep maker. This is the first sign that there's a concrete step made toward this, because they temporarily halted their production in Canada and Mexico. And for instance, Ford also began offering steep discounts. So just this whole sector is really just, I would say, jittery. And the levies are really just part of a broader trade war. And I feel like autos.
Oh, did she say that Ford is doing discounts because they're afraid that they're not going to be able to sell their brand new cars? Didn't I say that the Achilles heel is for people to buy used? Don't buy. And that will pressure Ford and GM to lower their prices because their cars are too expensive. They've overtech them. They need to detech their cars and bring down the prices. Make them more affordable. There is no reason why people are spending so much money on their car. None. Zero. It's that game needs to end.
Yeah, I think what's frustrating to a lot of folks is if you just rewind back to January 1st, you had GDP, real GDP was growing. Inflation was moderating. Was it where we or the Fed wanted it? No, but it was moderating. And you had stock market at all-time high. And the discussion was about American.
Yeah, but he doesn't mention that the Federal Reserve made that inflation worse because they kept on cutting rates when they shouldn't have, because the inflation was above the 2% target and unemployment was below the 5% natural unemployment rate. So all those cuts that the Federal Reserve did in 2024 was inflationary. But Bloomberg won't say that because all of these traders and all of the talking heads, most of them on Bloomberg, just want the Federal Reserve to keep on cutting and cutting and cutting and cutting. And they don't want to admit that that cutting, when you cut it the wrong time, is inflationary. But he won't admit that.
Was among the IT hardware names exposed to calamitous, quote, tariffs. Taking a look at SoFi Technology, down 10%. Growing recession worries are hitting most fintechs across the board. Carnival, down 11%. Clearly a cruise liner exposed to the consumer. Banks getting hit hard. Bank of America off by 9%.
So what if Carnival is getting sold in for their stock, getting sold off? Big deal. Do you really need to have a cruise this year? Really? I mean, I think Americans need to step back and go, maybe we've been spending way too much on stupid shit.
Cheer of Academy Securities will join us as well. He had a problem with the math yesterday. So did a lot of other people. We'll break that down. This is Bloomberg Intelligence.
This is Bloomberg Intelligence. All right, let's go to MSNBC on how they're going to demonize Trump's policy. And they're going to say, well, we're now at a 50% chance of a recession. But before we do that, I want to talk about a stat here. All right. Taking magnesium and zinc and vitamin C with magnesium is really important. You can take them separately, but you get a dual benefit, a multi-purpose benefit when you take them together. And I'll explain why. Magnesium and zinc will help to boost up your immune system. But also, magnesium will help with your brain health. Research has been shown, that's been published from the European journals, that higher levels of magnesium will help with brain function. And actually, healthy brain matter is increased with higher doses of magnesium. All right. Now, so you want to boost up your immune system and your brain health. All right. Magnesium also helps with absorbing calcium. It's synergistic with D3. So you can get vitamin C with magnesium. That will help with your skin and your immune system and also help with absorbing calcium when you couple it with D3. and the magnesium is helping with your brain function. Now, on my store, you can get magnesium 3 different ways. Magnesium and zinc, which has the highest concentration of magnesium. The vitamin C and magnesium, you can stack them together or take them separately. And the Boomer Boost powder also has magnesium. So I want just to make sure that people that watch my show realize that there are 3 different ways that you can get magnesium on my store. Through the magnesium and zinc, vitamin C and magnesium to help with your brain health. Both of these will help with brain health, but also with the Boomer Boost. You can take them all together, all right, and get the benefits of that neural function, all right, from magnesium. Now, again, you can take this separately, but magnesium and zinc will help with the brain function, but also with your immune system. Vitamin C will help with your skin, immune system, and brain function. So please go to my store, preferably stack these together and boost up your immune system and your brain function. And like I said, taking magnesium will supercharge the effects of D3. So please go to my store, the-studio-reykjavik.com, get the magnesium and zinc, which is the highest concentration of magnesium that I offer. And you can stack them. You'll get a decent amount of magnesium that you need for brain function. And vitamin C and magnesium. You can take them together or you can take them separately. It's up to you. Drink it with filtered water because they're water soluble. If you spend $150 or more on my store, the-studio-reykjavik.com, you do get a free gift until supplies last. So it behooves you to purchase $150 worth of product. I have anti-aging boxes and longevity boxes that are at different price points to help you stack and get discounts to be able to get healthy. An anti-aging box or a longevity box has a built-in discount. You can use discount 5 on top of that and you'll get an additional $5 off. If you spend $150 or more, you will get a free gift. All right. So I've done everything I can to teach you how to stack this stuff, how to bring them at price points that are affordable for you to get healthy in 2025. You follow my protocol, which is a holistic approach. You will get healthy and you'll slow down the aging process. All right. But you got to follow my lead. If you do what I tell you to do, you will get healthy and you will slow down the aging process. Please go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos. Get the magnesium and zinc and the vitamins C and magnesium. Again, magnesium has been shown to help with your brain health. All right, let's go back to, ISM's services PMI at 9-month low. 50.8, estimate was 52.9. So economic activity is shrinking a little bit. Let's go to MSNBC and how they're demonizing Trump. Of course, it's the Morning Joe.
Are you going to vote for the tariff resolution?
I am going to vote for Canada.
Tariffs are a terrible mistake. They don't work. They will lead to higher prices. They are a tax, and they have historically been bad for our economy.
Mr. President, the price hikes that will happen for Maine families, every time they go to the grocery store, they fill their gas tank, they fill their heating oil tank. If these...
You know what? First of all,
so
most people that are getting their energy is from domestic sources, all right? There are some people that are getting their energy from Canada, but you know what? Guess what? You should be getting your energy from domestic sources. Full stop with that one. Second, the market is selling off. This is the time to buy if you have cash. This is the time to buy. Trump just gave you a gift, a long-term gift, right? By seeing the market come down, by purchasing stocks. And when the tax policy gets passed, the stock market is going to rally and you're going to make a good return on this. All right. If the market is down 10% and this elevates above 6,000 when the tax policy gets passed, you just made 10% in 6 months. So Trump just gave you a gift if you have cash on hand. Now, people that don't have cash on hand, all right, I get it. You're strapped. But the thing is that some people do. Or you just dollar cost average in per paycheck. All right? But this is the time to buy. So Trump just gave you a gift. But it's a long-term gift or a medium-term gift. And the other side of this gift is a stronger manufacturing base. That means that when Gen X starts to retire, there's going to be more money for Social Security because the younger generations will have good paying jobs and the economic clustering to have a vibrant economy. We keep on going on this track. There's not going to be good paying jobs for Gen Y and Gen Z. Now, if you don't believe me, just look at what was happening when someone was 18 or 22 years old when you were a baby boomer and being able to transition into the workforce, or when someone was 18 or 22 years old and transitioning into the workforce as Gen X. Those job opportunities were way higher and paid better, and the cost of living was reasonable compared to what's happening with the younger generation now. They're having a harder time establishing themselves because of this 35-year bullshit with globalization. So here you have representatives in Congress or the Senate that's just the consumer is going to hurt. But a lot of you consumers are also producers. And you aren't going to hurt in the long run. You're going to benefit from this. They'll demonize consumer. It's all about price. You think they really care about middle class? You really think that this person right here, whatever her name is, I forgot. But you really think that this representative or senator really cares about you? Or do you think she cares about K Street? And believe me, K Street hates what Trump's doing right now.
And as price hikes always do, they will hurt those the most who can afford them the least.
3 of the 4 Senate Republicans.
Mika, her father promoted globalization and funded the Taliban to, the Mujahideen, all right, to fight the Russians, only to be the seed for bin Laden. Thank you, Mika, for globalization. We spent trillions of fucking dollars in the Middle East because of failed foreign policy that came right out of the mouth of her father. Thanks, Mika.
And Paul and Lisa Murkowski, who joined all Senate Democrats to pass a resolution yesterday to eliminate President Trump's tariffs on Canadian imports. The bill now moves to the Republican-controlled House, where it's more than likely to die. Ahead of yesterday's vote, Trump called out the Republicans who were set to support the measure, writing on social media, quote, "What is wrong with them?" Other than suffering from Trump derangement syndrome, they have been extremely difficult to deal with and unbelievably disloyal to hardworking Majority Leader John Thune and the Republican Party itself. The other Republican to vote for the measure, Senator Mitch McConnell, defended his position in a statement, writing in part, quote, "At a time when Americans are tightening their belts, we would do well to avoid policies that heap on the pain. We ought to strengthen our friendships abroad and reinforce our..."
You really think that McConnell gives a shit about you? I mean, come on. Voting to eliminate Canadian tariffs. Well-heeled K Street lobbyists are putting pressure on your representatives in Congress and in the Senate. All right? And not just that. Let's dissect his statement. Brain dead McConnell. At a time when Americans are tightening their belts, they wouldn't be tightening their belts so much if it wasn't for runaway globalization and throwing away our manufacturing base for the last 35 years and reducing the ability for the young to have family creation and build wealth and purchase their first home. Comma, we would do well to avoid politics that keep on the pain. And that sounds like K Street in his ear saying, you got to stop the tariffs. It's hurting our stock price. Got to stop the tariffs. Stop the tariffs. We ought to strengthen our friendships abroad. Let's promote globalization some more, even though Canada has an unfair trade policy through their tariffs on our goods. Who started this? It wasn't the United States. And reinforce our allies as pillars of American prosperity and security. Who's America? Who's prosperity? It sure as hell ain't the middle class. It's the well-heeled K Street.
Of American prosperity and security. And Steve Ratner, you say most economists believe the tariffs are counterproductive and that there is hard evidence to back that view. Can you walk us through the numbers? And is there any positive take on this?
Let's see. Let's see if he says anything about pre-NAFTA job creation for the young and the ability to purchase homes compared to now the younger generation today. Let's see if he does that comparison. I bet he doesn't.
I don't think there's a single positive take on this. This is all just bad.
Really?
It's
really?
bad, as
really?
we talked about
really?
before, for
really?
inflation, it's bad.
Really? Really? Everything's bad about it. I just gave you a monologue for I don't know how long. I've been saying this for I must have been saying this on 100 videos. Strengthening our manufacturing base is going to build economic clustering. And when you have economic clustering, your GDP is going to go up. When you have your GDP go up, and let's just say your debt is the same, or your debt is increasing but at a slower rate relative to your GDP, your debt to GDP ratio is going down. That is important for a prosperous future for America. The status quo means the GDP, debt to GDP ratio is just going to keep on skyrocketing. We can't afford that. So our interest payments are going to go down. Our treasury bills are going down for interest. The actual rate of the treasury bills are going down. Right? Your bonds, your 10-year bonds going down. The actual rate. That means that when we are readjusting and refinancing our government debt, it's actually going to be cheaper. Just like how someone kind of refis their mortgage if the rates go down, it's the same idea. So our debt to GDP is going to go down. How is that? How's that negative? But he said everything's negative about this tariff crap. Well, that's not what's really translating into the market. See, it's all they're only focused on demonizing the situation to scare the consumer, because you just got to keep on paying. You just got to keep on buying because you're a consumer. Just consume. Don't produce, just consume. Well, the other side takes advantage of you. You're a slave. You are literally, the middle class is a slave in a global Egypt.
The growth is bad for everything. But let me put this a little bit in perspective. We talked about the stock market today and how bad a day it's going to have. This chart predates that, and it goes back really to the election. And I wanted to show you, because Trump's got a bunch, as we also talked briefly about before, of other economic and challenges he's facing. And so the stock market, which is this red line, our stock market, we start out here, and he was doing pretty well after the election. There was this burst of Trump euphoria, as we saw in 2016 as well. But since Inauguration Day, it has basically been straight down for our stock market. And that is a combination of anticipation of these tariffs, but also just all the chaos and commotion down there. the cutting, the Doge, all this stuff and the uncertainty has really scared the market. And that's actually in stark contrast. China, which has had a terrible run in its stock market, has actually done exceptionally well. And even Europe, which is certainly nothing to brag about on the economic
Don't
front,
be fooled. Do not be fooled. China's economy sucks. Don't be fooled on this crap.
Performed us. So Trump had a set of challenges already, as represented by the stock market before. And again, before yesterday, because we don't have updated numbers just yet, economists were taking down their projections for the economy for this year. So Goldman Sachs thinks that unemployment, which they thought was going to be 4%, they now think is going to be 4.5%. And these numbers are going to get worse when they put out a new forecast. Inflation, which they thought was going to be between 2 and 2.5%, they now think is going to be almost 3.5%. And economic growth, which was supposed to be almost 2.5%, they've taken down to 1%. And let me just inject, the last quarter of the Biden administration, economic growth was 2.8%, and inflation was down in the 3% range. And so they've taken an economy that was actually in pretty decent shape and moving in the right direction, and they are going to turn it upside down. And I think 50-50 into a recession.
Wow, 50-50. You have, as you said, companies like Goldman Sachs using the word stagflation, that combination of inflation and slowing growth. So let's move to your second chart, Steve, which is really the heart of this matter. Rising prices for regular people just trying to buy things around the house. What are you seeing there?
Yeah, so this is an analysis done by Yale's Budget Lab. It was, again, done before yesterday. It assumed a 20% universal tariff. I think you're going to find these numbers get a bit worse when they rerun them for the actual proposal, but it'll give you a very good sense of what we're looking at. And so it divides the country into 10 groups based on income. If you take the middle group here, they're looking at an average of $3,800 a year in additional costs to them. As you go up the income scale, the actual dollars you get do go up, but what's happening is the percent loss of your income is going down. In other words, it's regressive. People at the upper end are losing less of their income. People at the bottom end are losing more of their income, over 5% of the income, $2,300, someone in the second tenth from the bottom, which is probably $20,000 a year or something like that of annual income. Obviously not a lot. So this is an indication of consumers. We're also starting to see an impact on business, and that's again part of why share prices are so depressed, because of the costs. This is prices paid by manufacturers for their goods that they need to make their product, and you can see how it's already shot up before the tariffs. In anticipation of the tariffs, companies are adding to their prices, and we've also had a few tariffs put in place. And I'll just also quickly note that manufacturing has turned down and is now in contraction, another piece of not good news for the Trump administration.
So as we move to your third chart, you raised President McKinley a few minutes ago, Steve. So let's talk about the history of tariffs. We have a long record to prove whether they work or they don't work.
Wait a minute. Our global network, our supply chain, and the amount of goods flowing around the world at any given moment is far bigger than during McKinley's time. So you can't even compare. Not only that, you have technologies that are so much more advanced than during McKinley's time, where the comparison isn't right either. And you have a instability globally where we literally could go to World War III and have a nuclear war in minutes. In minutes. Because we have had this Damocles on us since World War II. So I just gave you 3 reasons on why doing a comparison between the two doesn't make much sense. War is much different. The economy, global economy, is much more integrated. And you have technologies that speed up innovation at a much faster pace than back then. And on top of it, you are now having more people that are moving away from agriculture and the rural area and moving into high density areas. That's another dynamic that's changing in the United States. So there's 4 different reasons. But let's see what MSNBC has to say, because they have nothing to say about Trump that's positive.
And we don't have to go back to McKinley. We only have to really go back to Trump 1.0, because he put in a bunch of tariffs. He put in steel tariffs. And by the way, putting in steel and aluminum tariffs, which he's also done this time, is really actually particularly dumb, because you're raising the prices for companies in this country that use steel and aluminum to make their products, like car companies. In fact, I think the CEO of Ford used the word dumb when he put in his last round of steel and aluminum tariffs. But let's go back to the ones that he put in last time around. So we gained a grand total of 1,000 steel jobs. But for the reason I said, all the increased cost to all the steel users, we actually lost 75,000 jobs out in the manufacturing industry because their steel prices had gone up. So a net loss of 74,000 jobs from that set of tariffs.
And Steve, sorry to interrupt, but this is the whole crux of the argument for the president, which is we're putting these tariffs on because it's going to help the American economy. It's going to drive business to the United States.
But it's also making sure that the mill houses that are making the steel and the aluminum are United States produced, so we can have a war effort against China.
It's just the opposite happened a few years ago.
Yeah, and as I said, because when they put them on raw materials like steel and aluminum, it's particularly stupid, because that's what our companies use to make their products. And so their costs go up, their sales go down, and they cut their workforce.
Okay, so what's the answer? If this tariff idea is so bad, what's the answer to make sure that the younger generation has the viability to have family creation and build wealth and purchase homes when they're in their 20s? What's the answer, MSNBC? Because you don't have one. You don't have it. You don't have. What's the answer to that? Because if you can't solve that problem, you're not going to have a vibrant economy in the long run.
Tariffs. So he put on $50 billion of total tariffs in Trump 1.0 in his trade war then. But it hurt our farmers, because our biggest export is farm products like soybeans. And so he ended up subsidizing our farmers for $24 billion. So he took his $50 billion and spent half of it giving it back to farmers. So they've talked about how these tariffs are going to solve the budget deficit problem and generate hundreds of billions of dollars of revenues. History would not tell you that that is what is likely to happen. And then let's look at one other specific example from the past: laundry machines. They put a tariff on laundry machines. It raised the price of laundry machines by $200. And by the way, companies also increased the price of dryers because they sell them together. And they created 1,800 jobs at a cost per job of $817,000 per job created, because there was some additional domestic production. But when the tariffs ended during the Biden administration, the price of the machines went down $75. And when all is said and done, they actually were down by a bit less, by a bit more than inflation. So here's an example of exactly how it works. You put on tariffs, prices go up for everything: domestic, imported, washing machines, and dryers. You take them off, they go down. And for all that, you've paid $800,000 a job.
How quickly are American consumers going to feel this?
I think probably very quickly. And then in the next few months, the tariffs go into effect over the next few days, instantaneously, almost instantaneously. There are some goods that are already here that won't be tariffed. But I think, frankly, you're going to see companies start to raise prices right away, because it's going to be, as we talked earlier, it's going to be hard for them to recoup all the costs of the tariff, and they're going to do their best to do it by raising prices very quickly.
Morning, Joe. Economic analyst Steve Ratner, thank you very much for all those explanations.
Well, once again, MSNBC doesn't want to say anything positive about Trump. And they don't have a solution for the younger generation to be able to have a vibrant economy. Please go to my store, the-studio-reykjavik.com. get the structural nanosilver toothpaste. This is a very high quality toothpaste. Actually, it's the best toothpaste that you can buy. Go to my store, the-studio-reykjavik.com. It's a structural nanosilver toothpaste. It'll whiten your teeth, freshen your breath, help with your gum line health, reduce inflammation, and improve your oral hygiene. Oral hygiene is really important, especially when you get older, to mitigate any problems vascularly or with your valves. So it's really important to use this toothpaste. All right. Again, get a few tubes of this toothpaste for your household. Very high quality. Please go to my store, the-studio-reykjavik.com. You spend $150 for an order, you will get a free gift. I'm not going to tell you what it is, but if you act now, you'll be able to get that gift, those gifts, if you spend $150 or more. Now, if you want to save some money, use discount 5 and you get $5 off. And if you want to save additional money, get an anti-aging box or a longevity box that's on my store, the-studio-reykjavik.com. They are curated in such a way, I've designed them in such a way where they're lower in price if you purchase those boxes versus purchasing the individual products. And you can put a discount 5 on top of that. So there's lots of ways to save money, and you get a free gift if you spend $150 or more. Please help support my work, and better yet, support your health. A healthy America is going to be a vibrant America. You want to cut down on healthcare costs? Follow my advice. If many people across the country do what I have to say about this subject matter, healthcare costs would be saved in the billions. All right? And better outcomes will take place. But it's about a holistic approach. So please go to my store, the-studio-reykjavik.com. Get the structural nanosilver toothpaste and help support my work. Use discount 5. Get a few of these for your household. Really high quality. All right, let's continue on with Bloomberg, the globalists.
Winner and losers. I actually think the pure plays, the Rivians, the Lucid, and the Tesla will be clear winners because if you look at the legacy automakers, they're actually building a lot of these EVs in Mexico.
Yep.
To bring down costs. Yep. They offer a more attractive prices for consumer.
Yep.
But now with these tariffs, that they're going to have to raise prices on EVs, not really cut prices to bring in consumer. And unfortunately, GM was actually on their way to profitability on EVs, and that's going to, these tariffs are going to derail that effort.
Do you really think that we're going to see Ford, more like GM, build more auto plants in the U.S.? Is that actually going to happen?
I think with the global tariffs, with the auto tariffs plus the reciprocal tariffs, it's actually upending this supply chain that's been put in place since 1965. The first kind of auto agreement between U.S. and Canada, which was called the Auto Pact. These tariffs are upending that, and I do think that these U.S. automakers will bring vehicle assembly back. And it's going to have a ripple effect because they're going to force a lot of the suppliers to also come back to the U.S. as well. So we don't exactly know how much it will cost. We've made some estimates. It can cost upwards of over $4 billion just to construct a new plant, a greenfield plant one greenfield plant in the U.S.
Have any of the companies that you cover, have they talked about we're willing to make that investment?
Have not, but I bet there's going to be a lot of questions during the earnings call.
They're going to talk about it, though.
Yes,
at this point, they got to talk about it. Which company do you think is best poised to actually do that if they were to pour some billions into that?
I still think the U.S. automakers will actually, relatively speaking, will be better off than, say, the Europeans and some of the Asians like South Korea.
Yep.
South Korean. Because the U.S. automakers do have additional capacity in the U.S. that they actually can bring that capacity, shift that production back in the U.S. Where the Europeans and some of the Asians will have to build greenfield sites, which could cost about $4 billion for a plane.
Wow. And I think go to Tennessee or South Carolina or Alabama, one of the non-union states, and there you go.
There you go.
They've already done that. All right, Steve Mann, thanks so much for joining us, Steve Mann. He's a global autos and industrials research analyst for Bloomberg Intelligence, actually in New York City here today in our Bloomberg America studio. I know. So many people can say that. So we got to get him to New York more because this is the center of the world. Princeton is nice, but I'm just saying here, S&P 500 off 242 points, 4.3%. The NASDAQ off 980 points, 5.6%. The Dow, how about this, folks? Off 1,500 points, 3.6%. That's what we call a sell-off. That's not a drawdown, that's a sell-off.
All right, let's take a look at another. This is CBS Texas about the reciprocal tariffs.
President Donald Trump's new reciprocal tariffs against more than 60 countries sent markets tumbling this morning in Asia. Economists say that the move will likely drive up prices on imported goods like electronics, car, wines, and even clothing here in the U.S. Top European Union officials are calling them a major blow to the global economy, too. CBS News' Jared Hill has more on the president's announcement and the worldwide reaction.
Today, countries around the world are threatening to retaliate after President Donald Trump laid out his long-awaited tariffs.
It's our declaration of economic independence.
The plan, a 10% tax on nearly all goods brought into the U.S. starting April 5th. On April 9th, additional reciprocal tariffs on more than 60 countries President Trump dubbed the worst offenders, likely meaning Americans pay higher prices for electronics, clothing, construction equipment. Canada and Mexico are exempt, instead facing tariffs linked to fighting the flow of undocumented immigrants and illegal drugs. All of this as the president's 25% tariffs on foreign cars and auto parts kicked in overnight.
If you want your tariff rate to be zero, then you build your product right here in America.
Impacted countries are calling on the U.S. to reconsider.
We're not preparing for further countermeasures.
On Capitol Hill, criticism from both sides.
These tariffs are a disaster for the average American family.
I don't think it's going to be good for us politically. It's not good for the country either.
Kentucky's Rand Paul, one of 4 Senate Republicans to join Democrats in backing a long-shot bill to undo tariffs against Canada. Jared Hill, CBS News.
They're just trying to demonize, they're trying to scare, they're really trying to scare the consumer. Now let's go to CNN. They just published this 9 minutes ago.
YouTube Premium is ad-free YouTube and exclusive access to all things VIP. So you can superfan for.
This is CNN Breaking News.
Now we begin with the breaking news from Wall Street. Trading has been underway now for just about 30 minutes, and nervous investors, very nervous investors, are weighing in on President Trump's historic new global tariffs. The early assessment, deep concerns. Almost all
S&P 500. So this is a little bit. They're about an hour off or so, but maybe a little bit more. But the S&P 500 now is trading at 5,422. And remember what I said with the resistance levels. You have a 5, if it closes below 5,500, you're going to have another support level at about 5,150. All right. The next support level after that will be 5,000. And then the support level, a very strong support level after that is the 4,810. Okay. So don't get freaked out. If you have money in the market and it's long-term, don't worry about it. You're going to be fine. This is a great opportunity to buy shares if you can. Don't get freaked out.
And that means inflation-weary Americans will see even higher prices on virtually everything.
Yeah,
And that adds to the deepening concerns among economists that the U.S. and indeed much of the world may be on a collision.
What if Americans just stop buying the stuff they don't need and just, do a little bit of austerity? Prices will start to drop because they would have all this inventory and they would need to sell it. So you've offsetted the tariff effect. I'm telling you, the globalists are they're more worried about this than the consumers. They're trying to scare the consumers, but the globalists are more fearful of what's happening.
With a recession. Let's begin this hour with CNN business and politics correspondent Vanessa Yurkevich. She's in New York watching all of this unfold. So Vanessa, where do the markets stand right now?
Well, markets are tumbling as investors are really digesting worse than expected tariffs. You have the Dow, the NASDAQ, and the S&P all down below, as you can see there, 3%. Retail stocks in particular really selling off. Nike, Adidas, Lululemon, these are companies that source a lot of their goods from abroad, countries that are now under higher tariffs. And just look at the countries that were hit in yesterday's announcement. You have the European Union, 20% tariff. You have Japan, 24%, China, 34%, and Vietnam, 46%. Key trading partners to the U.S. investors are worried what this means for businesses, and then, of course, those businesses' profits. But let's just reset. What do we know right now? We know that there are auto tariffs in effect right now, but coming on Saturday is that 10% universal tariff on Wednesday, higher tariffs on about 60 countries, tariffs on auto parts, foreign auto parts on May 3rd, and then maybe coming additional tariffs on lumber, semiconductors, and I'll add copper there as well. And as you mentioned, Wolf, there is talk of what this could mean for a recession. I just spoke to an analyst who says that the longer that these tariffs stay in place, the more likely that there will be a recession. We also heard from Mark Zandi from Moody's Analytics, who said if they follow through, if these tariffs go into effect, I buckle up and brace for impact. A recession seems more likely than not. Wolf?
All right, Vanessa Yurkevich in New York for us. Thank you very much, Pamela.
Well, Wolf, the White House and Republican lawmakers concede that the ripple effect of the tariffs will cause some pain to Americans. But the White House says it's the initial cost to revive manufacturing jobs in the U.S. Here's what the vice president said this morning.
For 40 years, we've had an economy that rewards people who ship American jobs overseas and raises taxes on American workers, and we're flipping that on its head. We're going to cut taxes for American workers and for American companies that build here. We're going to make it harder to ship American jobs.
Now, think about what
overseas.
he just said. Just think about what he just said. Globalists make the money by shipping jobs overseas where they're playing the labor arbitrage to sell goods cheaper to you. And then you have deficit spending that's taking place in Congress, and they have to raise your taxes to pay for that deficit spending. So the middle, like I said, the middle class doesn't win in globalization. That's a canard. You bring back the manufacturing. If you stabilize and bring back manufacturing here, that elevated price that they're talking about, all right, potentially on certain goods, would have been the price if you were been making this in the United States. They just normalized it because they've normalized the arbitrage. They've neutralized the arbitrage that they were doing with the labor. If you have tariffs from another country, let's just say doing 20% tariff to prevent the United States from selling into their market, right? And they have subsidies that are going on in that country where globalists, multinational corporations can benefit from a cheaper labor force and then make a good and then ship it to the United States. All right. If you neutralize those subsidies and those tariffs from that other country on American goods, then what happens is now you have even the playing field for U.S. manufacturing to be sold in that country, and you've eliminated the labor arbitrage, so manufacturers in the United States can sell goods domestically. Because you've eliminated the arbitrage. That's the only reason why the globalists are doing this. So by what Trump just did is just showed you what the price would have been if Americans would be making these products. But with economic clustering and innovation, because you're making things again, that price actually would be a little bit lower than that. All right, but just a rough estimate, we have artificially been importing deflation for 35 years and pretending that our economy is growing. Meanwhile, the rich got a lot more wealthy, while the middle class did not get wealthy. That's what happened for 35 years. Now, should we keep on going on that crazy train? Probably not. But J.D. Vance is absolutely right. The globalists shipped your jobs away, and Congress taxed you more. And they were spinning it in a way where your economy is growing. But it really wasn't, because high-paying jobs were leaving. If job creation was so great in the United States, even though we have a low unemployment rate, why is it that the young can't get jobs? Everyone knows, I'm at the Harvard Club all the time, all right? I'm kind of getting famous over at the Harvard Club. But all right, but the point here is this. There are younger grads, they're coming out of the college that can't find a fucking job in finance. Now, part of it's because they're blacklisted. No one wants to hire a Harvard grad right now in 2025 because of the fiasco that happened in 2023 and 2024. That's part of the problem. But what is happening in New York is that people coming from elite institutions cannot find the high-paying jobs that they used to find. MBAs coming out of Harvard, less hiring for MBAs, even out of UPenn and out of Columbia and out of MIT. MBA hiring is down. So job availability, even for the elite student coming from elite institutions, is lagging. Don't you? That's a canary in the coal mine. Globalists have fucked up America.
It's a total shift in the way that we've done economic policy in the United States of America, but it was necessary.
All right, let's go live now to CNN White House reporter Elena Trina. Elena, what else are you hearing from the administration this morning?
Well, Pamela, it's clear the White House has been very intentional in its messaging. Despite some of the president's defenders, Republicans on Capitol Hill, others who have argued that the president is a pragmatist at heart, that perhaps he would pull back on some of these tariffs, it's clear they were wrong. The president was serious about this. And as Vance just laid out, and as we've heard from other top advisors this morning, he is committed to these tariffs really because he fundamentally believes the United States is getting taken advantage of, and he wants to really break the trading system that has been built over the last 70 or 80 years now and see this realignment. Now, we heard from Press Secretary Caroline Leavitt this morning. She was speaking with CNN. She said that, this isn't going to be a negotiation. This is a national emergency. Listen to how she put it.
The president is firm in his approach, and the president is ensuring economic stability here in the United States of America. This is a common sense policy, and if these countries wanted to negotiate, if these countries wanted to do what's right, they've had 70 years to do it.
I think, Pamela, the end of her answer there, saying it's 70 years to negotiate, is really key here, because that's the question now. Where do we go from here? We're going to see, as Vanessa just laid out, all of these different countries likely respond and in kind to these tariffs and retaliate. That could further escalate this trade war now. And so that's really the key question. One thing as well, just as we watch the stock market, is that the president has been far less reactionary to how the stock market is in this term, in his second administration, than in his first. We have been told repeatedly now not to see him react to the stock market directly because of this. Instead, he has said repeatedly now that he believes there will be some short-term pain. So I keep that in mind as well as we cover this. Pamela?
All right, Elena Train, thank you so much. Wolf?
All right, Pamela, as we mentioned, analysts now say that President Trump's tariffs will likely plunge the global economy into recession this year. Some countries say they're hoping they can negotiate with the U.S., while others have vowed swift retaliation. Listen.
We had been requesting the U.S. government to review its unilateral tariff measures at various levels, and we are extremely disappointed and regret that such measures have been implemented nonetheless.
Our intention remains to secure a deal, but nothing is off the table.
We will continue to make the strongest case for these unjustified tariffs to be removed from our exporters.
We're going to fight these tariffs with countermeasures. We are going to protect our workers.
The entire global economy will suffer from these ill-considered decisions.
No, they're not protecting their workers. They're protecting their multinational corporations. Let's stop playing the bullshit game. And it's not Trump that's driving the world economy into chaos and potentially worldwide recession. It's a game of chicken here. If they don't remember who started the tariff issue, it wasn't the United States. The United States has been staying quiet with most administrations and just allowing it to happen. But the other countries, our other trading partners, have had tariffs against us. That is the facts. That are the facts with this, all right? So they started this. So Trump is trying to neutralize the issue, and then they're saying, well, we'll escalate it because they want to play the arbitrage game, all right? So if the world economy plunges, it's because they played chicken and broke the economy, not Trump, not Trump. Who started the tariff war? It's not the United States. It's just the United States never wanted to fight back, because the tariff war has been happening for 35 years. And the United States just let it happen. Why? Because you had well-heeled people from K Street telling Congress what they wanted.
Stock markets across Asia have already tumbled after President Trump's announcement. Now China has vowed to counter what it calls bullying tariffs by the United States. We go live to Beijing.
All right, right now, the S&P 500 is trading at 4,000. I'm sorry. The S&P 500 is trading at 5,417. We are probably going to see the S&P 500 in this show break the 5,400 barrier. It's only 16 points away. And the S&P 500 is more than 4% down. It's almost 4.4% down. Oh, I'm sorry.
The fear is will ultimately be passed on to consumers.
What kind of retaliation potentially could we see from China?
Right, well, good morning. China says it is ready to fight back, but if this is a war, it's not necessarily revealing its plans about how and when it will strike. It certainly has the option, though, of continuing on the tariff theme by instituting more tariffs, more punishment.
Oh, so if they're going to institute more tariffs, if things are so bad, then they're going to institute more tariffs so they can maintain that labor arbitrage, and then they tank the world economy. So who's at fault? Trump or the game of chicken where our trading partners wanted to escalate the issue? Remember what Trump's doing. He's trying to neutralize unfair trade practices. That's what's happening. That's what's happening. But no one wants to talk about that.
American farmers. Right now, China imports a lot of soybeans from the United States. There are existing tariffs. Certainly, China could double down on that. But what's been interesting all day today, China's been very much taking on this diplomatic tone, talking about themes of resolving differences, urging the United States to cancel the tariffs. So it's kind of this wait and see mode as this April 9th deadline approaches. There's certainly an economic side to all of this, but there's also a lot of ego involved. Both Xi Jinping and Donald Trump want to look strong on the world stage. As one analyst mentioned to us today, it's the real question of who will fold first. Nonetheless, as you mentioned, this is creating a lot of anxiety, not just here in China, but across the entire regions. Markets are not looking at this favorably. We saw declines across many of the markets in Asia, including Japan, which of course is home to the auto giants, including Toyota and Honda. Wolf.
Hi, Mark Stewart in Beijing for us. Mark, thanks very much, Pamela.
And stock markets in Europe also took a tumble after President Trump announced 20% tariffs on imports from the EU. So let's go live now to Paris and CNN senior international correspondent Melissa Bell. Melissa, how big of a blow are these tariffs to Europe?
Look, senior European officials been talking to me just a short while ago about the figures. They were handed this 30-page document yesterday. Europeans are contesting a bunch of the figures. They say it's full of mistakes. There are things that have been tariffs applied to them twice. Overall, what Europeans are saying is that if you look at the last 3 rounds of tariffs that have been applied to them, it is 70% of all European goods that will head to the United States that are now the subject of tariffs. There's 380 billion euros worth of goods. So it's a huge blow to the European Union. And what's interesting is that the Commission is saying on one hand that it's going to seek to negotiate. The high-level negotiations with Washington begin, we understand, even tomorrow afternoon. But at the same time, they're really preparing for a war. They say that they did not start, but that they are ready to wage. And what they say their biggest asset is the biggest single market in the world. So 450 million consumers that they say they're going to protect, but also use in their fight. So things like, for instance, sourcing soybeans elsewhere than the United States, motorcycles, the sort of goods that you would expect them to seek to buy from other partners in the United States. But more than that, the Commission has a bunch of more measures, retaliatory measures up its sleeve that could hurt, for instance, big tech that makes, say, Europeans.
Now, a lot of people aren't paying attention to what's going on in the world today or in the last few months. United States ethos started with unfair taxation. Remember the stamp tax? Well, guess what? Don't be surprised that a new revolution takes place because of unfair tariff practices by our trading partners. See, the revolution was really, at least from an American perspective, the beginnings of an anti-globalist agenda. Our founding fathers were anti-globalists. They didn't want to be ruled by a king. They didn't want to be ruled by a monarchy. They didn't want to be ruled by an establishment. We believed in self-determination. All right? So it all started with the Stamp Act. They thought that they could just tax the colonists, but our founding fathers didn't like that. Well, just like what John Hogue has been saying, the birth of the United States is tied to the actual rotation of Pluto around the sun. All right? And we're moving to the 250-year anniversary of the United States and moving into a new age. And it is now time for us to rekindle that flame of self-determination. And we're seeing that through Donald Trump and this tariff issue. And it's very clear the globalists do not care about America, do not care about the United States. You had people that were supporting the king back during the revolution and not supporting our founding fathers. All right? That is an analogous to what we're seeing today, where you have people that are promoting the globalists and not this America First agenda. We are reliving, literally reliving the revolution. What side do you want to be on? Because I know which side I'm on, and I've always been on it. Bring on the revolution.
And their profits in the EU, Europeans are preparing to fight back and to fight back quite aggressively, Pam.
All right, Melissa Bell, thank you. Wolf?
All right, Pamela, let's get some more right now on all the breaking news. Joining us, the New Jersey Democratic Senator Cory Booker. As you know, he just set the record, I should say, this week for the longest floor speech in the modern history of the U.S. Senate. Senator, thanks so much for joining us. I want to talk about your marathon speech in just a few moments, but let's get to the breaking news first. What kind of impact, Senator, are you expecting these massive Trump tariffs? What kind of impact do you think they will have on American consumers?
Now think about this. Before the clown talks from New Jersey, because he is a clown, bull-headed clown, all right? During the revolution, all right, in the early days, you had the monarchy and its governors in the colonies promoting this idea that you want to stay with the king, that your life will be better, you'll be protected. How's that any different? How is that any different than what Booker's saying? Booker is a redcoat. Always has and always will be.
Explosion of a reaction from across my state, and people from across the political spectrum are angry and upset because they know the impact it's going to have in New Jersey on jobs, on businesses. But for our consumers who are already struggling under a president this last 73 days that said he would cut their costs before he even did this, inflation was going up.
All right, Booker clown. Clown Booker from New Jersey. Clown Booker from New Jersey. Why is it that your constituents in New Jersey are suffering so much? Why? Could it be that we have runaway globalization for the last 35 years?
Going down. Before he even did this, consumer confidence was down. Before he even did this, grocery prices and eggs and things were going up. So this is now going to put about a $3,000 to $4,000 added increase for the average New Jersey family. Will be paying between $3,000 and $4,000 more per year just to meet the basic needs that they need for their family. And for a lot of families, they can't afford that. They're already struggling, and they're seeing a president.
You know why they can't afford it? Because you destroyed the economic clustering of the country the last 35 years. Clown Booker.
Well, promises break them over and over again.
Your business is crushing it.
All right.
Unless they've got the right help desk software.
Let's go to Bloomberg. Let's go to Bloomberg. Apple drags big tech lower after broad tariffs. I mean, we are seeing history.
How's actual demand for iPhones? This might seem like an insanely rudimentary question right now based on all we're dealing with, but what's the underlying move there?
If you were to ignore everything on the tariff side,
yes,
the demand was just in line with what it has been in the last 2 to 3 years. We are not seeing a major spike in demand. Although in some Western countries where they have launched Apple Intelligence, they've seen some improvement, but China has still been weak, and that has been the big story with Apple. And what we were hoping by the end of this year, fiscal year, September, October, when they launch the next phone, Apple Intelligence will be in all the major regions, the new phone form factor come out, the slim iPhone 17 that Mark Gurman talks about, and all of that creates a new excitement. But, I mean, everything is fair game at this point.
All right, Anurag Ron, appreciate that. Anurag does all the technology stuff for Bloomberg Intelligence in our studio. How big is that? I mean, that's because you had your big AI conference yesterday, which was extraordinarily successful. I stopped by a few times. The room was packed.
It's really fun, actually.
Jennifer, you hosted a panel,
yeah.
Right? Yeah, exactly.
I learned things.
Yeah, you learned things. So it's good stuff. So anyway, let's switch gears. Commerce Secretary Howard Lutnick, he said today that in order to secure relief from President Trump's new reciprocal tariffs, foreign nations will need to address a host of policies that are limiting imports of American products.
Yep.
He joined John Farrell on Bloomberg Surveillance and was asked what will be the president's focus after the recent sell-off in equities.
Donald Trump is focused on the economic pain that the United States of America has suffered over decades.
Yep.
Since NAFTA, 90,000 factories, not jobs, factories, 5 million high-paying jobs gone overseas.
NAFTA destroyed our manufacturing. And Trump understands this.
People are going to realize it is the great American economy that is the winner here. And anyone who doubts it, and anybody who shorts Donald Trump, or anybody who doubts the strength and the power of the American economy is making a foolish bet. Sure, importers are going to have a tough time figuring out what to do because they went and found the cheapest production in the world. It's time to bring that production home, to have the smart, amazing people who run American companies figure it out, bring robotics back to America. And I would say that United States domestic growth is going to have the greatest resurgence ever under Donald Trump, and that's what he has set in motion yesterday.
You'll accept it takes time to engineer a supply-side response, though, sir. And in the meantime, you can see bad things happen. Do you accept that?
Well, what I can accept, of course, it takes time to build factories, but companies understand how to do it. They will do it. The United States of America is the greatest economy in the world. People have to do business with it. The rest of the world will bring down their trade barriers, and you'll see a great resurgence in our ability to sell agriculture overseas. You'll see factories being built here, and that factory production will be faster. So sure, there will be a rebalancing of those who make things in cheap labor markets, figuring out how to make them here. But ultimately speaking, and I think in much less time than you think,
2 years,
the world will reorder itself, will figure it out, and
2 to 3
the United
years.
States growth rate will turbocharge compared to the rest of the world. We've been too close to them because we've been, our presidents have been presidents of the world. And Donald Trump ran on the policy that he was going to be the president of the United States, of the workers of the United States, and he was going to place American workers first. And that's what he did yesterday. And that's what everybody's feeling. Those workers have been disrespected, and now they're going to be respected.
Mr. Secretary, just a final question, if we may. Any calls scheduled for today with the Europeans? Do those negotiations start this morning immediately? Can you give us a sense of things?
Absolutely. Our teams are talking to all the great trading partners today, and we are available for our great trading partners every day. It is time for them to do deep soul searching of how they treat us poorly and how to make it right. It is time for them to do that. That is going to be difficult for them because they've taken advantage of us for so long.
The bullshit game is over. The smorgasbord of the world onto the American taxpayers is done. Please go to my store, the-studio-reykjavik.com. Get the ashwagandha root. This helps to control your glucose levels and your cortisol levels. It'll bring down inflammation at the vascular level and systemically. Also, turmeric is a supplement that you take to bring down inflammation. It'll help with your cardiovascular health and your immune system, and it will soak up free radicals. When you stack these together, it's going to help with your vascular system and your immune system. Please go to my store, the-studio-reykjavik.com. Get the ashwagandha and the turmeric, stack them together, bring down that inflammation, boost up your immune system, help with your glucose levels, and by bringing down inflammation at the vascular level, you're reducing plaque formation. If you spend $150 or more on my store, the-studio-reykjavik.com, you will get a free gift until supplies last. You can use discount 5 and you get $5 off. All caps, discount the number 5, you get $5 off. If you purchase an anti-aging box or a longevity box, which is cheaper than purchasing the individual items on the store, you'll get further discount, and you can put discount 5 on top of that. So it's a great way to save money. Please go to my store, get the products, get healthy, follow the protocol and the stacking that I tell you, and you're going to start seeing huge improvements in your health. Please go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos. All right, I want to go to Cottrell talking about the tariffs here.
All right, joining us now, one of the key players in the whole White House discussion on tariffs and, of course, the economy is the chair of the Council of Economic Advisors, Mr. Steve Myron. Steve, thanks for coming on. Appreciate you staying up late tonight. Not so late, really. So just clear this up for me. I'm getting conflicting advice. With respect to the 10% baseline tariff and with respect to the so-called reciprocal tariff charges, is it both or is it one or the other?
Thanks for having me, Larry. It's great to see you again. Look, the 10% is sort of a floor. So what the president has done has decided that other countries are going to pay a tariff similar to the totality of trade effects they impose upon our exports. And there's a 10% floor on that. And so it could be 10% or it could be higher. But the president campaigned on, the president promised to make trade fairer for Americans. He promised to make American workers on fairer ground vis-a-vis the rest of the world. And he's doing that.
So I was going to ask you, China at the top of the list. I've got the color chart, and I appreciated the president putting that chart up in the Rose Garden. So USA discounted reciprocal tariff on China's 34%. China charges to the U.S., which is tariff and non-tariff barriers, is 67%. This thing is 34. Now, when I look at the 34% that we're going to charge them, this is a kinder and gentler President Trump. Do I add the 10% baseline tax or not?
No, you don't add the 10% baseline tax. The 10% baseline tax is for companies. Is for countries that would have is a minimum that countries would pay to avoid transshipment problems, to place a minimum, to put American workers on fair ground.
All right, I get it. No, I just wanted to clarify. We appreciate it very much. I figure you're the smartest guy in the building, so certainly you will know about this. Talk to me for 1 second about transshipping. We had former Commerce Secretary Wilbur Ross on the show Monday evening. And there's a lot of cheating that goes on. And specifically, China shipping. Okay, so we may tariff China and China may not be able to sell, but they will sell to Mexico and then they'll sneak their stuff in underneath the domestic content rules of USMCA. How do you stop that, Steve Myron?
Yeah, so that's a fantastic point, and it remains a significant problem. China not only failed to live up to its phase 1 agreements when it made a trade deal with the president the first time, and continues to cheat, lie, and steal from America, but they go out of their way to avoid the tariffs via the transshipment that you're describing. So it's of critical importance not only to crack down on transshipment, but to take a worldwide approach to tariffs, as the president has begun to do with the reciprocal tariff program, which by looking at trade balances with individual countries, the president is addressing transshipment in that manner.
Talk to me about Mexico and Canada. Now, the 25% tariff, but if it's USMCA, okay, then there is no tariff. They would have a 10% baseline in lieu of that, or how's this going to work on our neighbors?
Yeah, so I believe what's happening is that Mexico and Canada are not part of this program. I believe that they are part of the other USMCA specific programs, including the Canada and Mexico fentanyl tariffs, as well as the auto tariffs, which will affect them as well.
So if they are compliant with USMCA, they're okay, they're clean, no tariff.
I'm not an expert on the trade law and the trade implementation, but I believe that's the case.
Yeah,
I think we can follow up with USTR. Yeah,
I think yes, we can either do that or call Bob Lighthizer, or somebody's going to know about this. I get it. How about the estimates of potential tariff-related revenues? I've seen 600 billion, 700 billion. There's a lot of money there. Have you done any calculations, you and your colleagues at the CEA?
Yeah, so we have looked at it. I don't have a precise number for you right now, but what I will say is that it's maybe in the area that you were discussing there, maybe closer to 500. We'll have a precise number in coming days. But what's really important is what you do with that revenue.
Yes.
And that's a really nice side effect of tariffs. So the tariffs were aimed at the national emergency, but the revenue is a really nice side effect. And you can use that revenue to help pay for tax cuts, to pay for the extension of the Tax Cuts and Jobs Act. And there's even enough to pay for the further tax relief that the president has promised, and potentially more.
Steve, this is the most wonderful thing. This is music to my ears. I can't believe how beautiful you are saying this. I raised it with Speaker Johnson, who is a supply sider, and he said he'd think about it. Yeah. I don't see what if now I know this stuff's not going to happen overnight. I get that, but if you're making estimates of revenues from various sources, right? These 10-year estimates. Maybe they're not worth the paper they're printed on, but everybody in Washington uses them. If you're going to, plug in $500-600 billion a year, to me, that's new tax cuts. Heck, I'd lower the personal income tax. I'd lower the corporate tax. I'd lower the payroll tax, that kind of thing. Is there a discussion about that, Steve Myron?
No, look, I absolutely agree with you. I think that those are fabulous ideas. And what could be better than tariff revenue paid for by foreigners that's used to cut taxes on American families and American companies and American firms, right? What could possibly be a better combination than that? That to me is an idea that can help usher in the golden age. And I think that there is a conversation around further tax relief that the president has promised, that the president has emphasized: no tax on tips, no tax on overtime, no tax on Social Security. And given the scope of these tariffs, there ought to be some additional revenue left over. What we do with that revenue, well, that's between Congress and the president.
Yeah, music to my ears. Steve, let me ask another question. You've written about this down through the years, the fate of the dollar exchange rate. Now, I'm going to put gold aside for a minute. The dollar is very weak. All currencies are very weak against gold, but I'm going to put that aside. I believe you have written, and some others, when these tariffs are applied, dollars become a little more scarce, and they're not as many. The trade deficits are low, dollars are more scarce, and the value of the exchange rate of the dollar goes up. Now, you can tell me if you still agree with that. And then, to me, if that is true, if the dollar is going to go up against these other currencies, then that would help to subdue any inflation or price pressures, would it not?
Yeah, so there's a lot to unpack here, and both in theory and the history of empirical evidence in the economic literature is that the dollar should move in response to the tariffs. Now, that's the one issue is that's an all else equal statement, and there are a lot of moving cross currents that are occurring now that weren't the case in 2018, 2019. In paramount among those is our attempts to reorient the economy from the Biden administration government-fueled economic growth to more sustainable, durable economic growth driven by the private sector, right? And that has had consequences in the economic growth data and will continue to have consequences in the economic growth data, which are causing cross currents and also affecting the dollar and getting a little bit in the way of that at the moment. Now, when it comes to who pays for the tariffs, at the end of the day, the person who pays for an economic policy is what economists would call the more inflexible person. And the example that I'd like to give is if you're buying a house. So you're looking in a town to buy a house, and then the town raises the property tax rate. You can just decide to move to look at the next town over. But the person selling the house can't pick up the house and move it. You're flexible. The seller is inflexible. The seller has to lower their selling price to eat the property tax.
Well, that's
the same thing.
I love that. Look, Kevin Hassett and I have talked about this for years. I mean, I think I like to use China as the exporting nation, but the exporters who are hit by it, they're going to have to eat half of it. They're going to eat half of it. I think that's what the evidence shows.
They'll eat much more than half because they're inflexible and more flexible because we can substitute to home production. We can substitute to different countries to import from. The countries that have built their entire economies around exporting to the American consumer have no substitute. They're inflexible. They will eat the burden of the tax in the long run. And what that means is that they ultimately pay for the burden of the tariff. Now, there's a couple ways that can happen. It can happen through the exchange rate. And part of that played out in 2018, 2019, or they can just lower their selling prices.
All right, last one.
One way or another, they'll pay, yeah.
Last one. It's a good answer. Last one, real quick. How concerned are you about short-term cost increases, short-term price increases?
Look, at the end of the day, this is a historic change in tariff rates and a historic change in policy that is standing up for American workers, standing up for American companies, and putting America first and on fair ground against the rest of the world for the first time in decades. Are there going to be short-term bumps as a result? Absolutely. But what the president is focused on is a long-term transformation and improvement in the durability, sustainability, and fairness of the American economy with respect to the rest of the world.
Well, I would just say, I would say, I'm sorry, we're short time, but you know what? Let's see what happens. Let's keep our powder dry. People are jumping to conclusions left and right, up and down. Let's just see what happens. Steve Myron, you're doing a great job.
Most importantly is that the effects of tax cuts and regulation are going to be incredibly disinflationary.
Yeah. I've said and written as much. Steve Myron, thank you, my friend. Appreciate it very, very much.
All right, before we go back to Bloomberg, please go to my store, the-studio-reykjavik.com, and get the collagen supplement that I have here. This is a dual purpose product. This is going to help with your skin, your hair, your nails. It'll also help with your bones, your joints, your cartilage, and your musculature. It has an amino acid profile that's shown on the screen here, the typical amino acid profile. You can take a look at the label more closely on my website, the-studio-reykjavik.com. You get a big scooper. This is a month's supply. Take 1 scoop a day, mix it with soft foods, which is the way I take it. But you can also take it with just filtered water. Some people mix it with milk. Some people mix it with coffee. And you can mix it with a smoothie, but take it every day. Do resistance training. And that will help with your joints, your muscles, your bone structure. Now, to help with your skin, it works best if you take it with the vitamin C that I have with magnesium. Take the vitamin C supplement with the collagen, drink filtered water, about 64 ounces. If you can't drink 64 ounces, if that's too much, drink 32 ounces of filtered water. And what will happen is that the vitamin C and the collagen and the water will cross-link and help with the dermal layer. So that's really important. I also have an anti-aging box, beginners or advanced, for skincare. All right. You can purchase that. And in the beginner's box, you get the collagen, the vitamin C, and the structural nanosilver gel. The structural nanosilver gel will help with the topical layer. The dermal layer will be the vitamin C and the collagen. Make sure you drink the filtered water, like I said. In the advanced box, you get everything in the beginner's box, but you also get C60 and also resveratrol, which helps the basal layer. That's where the new skin cells are generated from. That's really important. So if you want to focus on your skin health, get the anti-aging skincare box that I have, beginners or advanced. It's the best if you get the advanced one because you're targeting all 3 basic layers and improve your skin. But like I said, taking collagen and doing resistance training will also help with your joint health, your cartilage, your musculature, and your bone health. Please go to my store, the-studio-reykjavik.com, and get the collagen. Take it every day. If you spend $150 or more on any order, you will get a free gift until supplies last. You can use discount 5 and you get $5 off. So please go to my store, get the great products that I offer, and do this holistic approach where it's proper supplementation, proper diet, proper exercise, filter your water, stay away from processed foods, do those detoxes that I've been mentioning, do the 4 modalities of working out: cardio, resistance training, balancing, and stretching, proper sleep, and train your mind. Learn new things, get that neuroplasticity going, the positive neuroplasticity, talk to people. And when you do that on a regular basis, this holistic approach, you're going to start noticing that your body is improving and you're slowing down the aging process. Please go to my store, the-studio-reykjavik.com. All right. Let's go to Al Jazeera here.
To start negotiating and see if they can reduce these tariffs, the 25% ones on these specific products and the 10% ones that have been applied to all exports to the United States. And what they're saying, their argument is that the United States has the 3rd largest trade surplus with Brazil. It last year it had a $28.6 billion surplus, and Brazil has had deficits for the last maybe 15 years. So they're saying basically, we are the good guys, give us a chance.
So given that, and given that the tariffs are only 10%, how are businesses and consumers in Brazil feeling? Are they hopeful for any possible negotiations?
Yes, and it depends on the sector. Some are hopeful, but everything is in a turmoil right now. Brazil has high inflation. The president's popularity is at a historic low. People are worried prices are high. They're just afraid that this whole turmoil situation will make things worse. But they're trying to look at this. That's what they're going to do now. They're going to have meetings with all the private sectors to see who will be more affected, will be least affected? What is the best way to handle this? One thing that the
Mark Carney from Canada speaking right now on U.S. tariffs.
Several countries did not go into effect for Canada, but the U.S. has imposed tariffs for the Canadian auto industry.
Des hélicoptères, des drones et des équipes canines pour détecter et empêcher le trafic de fentanyl et des produits chimiques utilisés.
This is the problem with the Canadians, is you got too many people talking French. God.
That could be seriously disrupted by Trump's tariffs. Making products abroad and importing them back to the United States has helped many companies boost their profits by using cheaper labor and local supply chains to cut costs. Apple makes iPhones, iPads, and other products in China. It moved some of this production to India and Vietnam in response to earlier tariffs, but now these countries are also affected. Clothing brands like Nike and Gap manufacture many of their products in Southeast Asia. It's estimated that motor giant GM imports nearly half of the cars it sells in the US. And when it comes to vehicles assembled in America, many parts are again imported. In the short term, American companies like these will have to decide whether to bear the cost of the tariffs or pass them on to consumers.
Let's go back to Bloomberg here.
Commonwealth.com to learn how. So let's bring this headline to you, just crossing the Bloomberg. Canada to match U.S. tariffs on passenger vehicles. Right now, the S&P 500 down 3.75%. That's a 213-point drop. The Dow Jones Industrial Average down 1,330 points. The NASDAQ 100 down 838 points. That's down 4.3%. Right now, the Russell 2000, remember this is mostly domestic, small and medium-sized stocks, that is down 5.8%. So the Russell 2000 is in a bear market officially. That's the definition of which is down about 20% or more. A gauge of services employment sank by 7.7 points. That is the most in nearly 5 years. Remember, services, that's the biggest part of the U.S. economy. Meantime, Doug Irwin, John French professor at Dartmouth, you guys interviewed him earlier today. He says the idea that tariffs will bring jobs back to the U.S. is just a false hope.
Even if we bring back some of the factories to produce these things because the cost of importing is much higher, the jobs probably won't follow. Even with textiles and apparel, a lot can be automated. And so, when we think about the steel industry, which has always been near and dear to the president's heart, in the 1980s, 10 worker hours to produce a ton of steel, now it takes 1.
For the companies that source a lot of the materials in Asia being hit the worst, Apple, Nike, 2 prime examples there. Apple has the biggest weighting in the S&P 500, and Apple shares right now, they are down 8.1%. Nike shares down close to 10%. And we have a quote, Alex and Paul, from the CEO of RH, that's Restoration Hardware. The tariff news has sent their stock. Right now, RH is down over 40%. The CEO, Gary Friedman, said in response, "Oh, shoot."
No, you're kidding.
Except the word wasn't shoot.
Oh, you're serious.
Anyway, I'm not going to say this is a family program. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
All right,
Remember,
thanks.
Oh, fudge.
Yes.
From Christmas Story.
Did you guys ever watch Battlestar Galactica, the remake? Nerd alert. Nope.
Wow.
Great.
Where are you going
I
with
saw
this?
the original.
Well, they had it was frack. Was the first word.
I see.
Yes, guys, I like board games, Catan, and Battlestar Galactica. You're welcome. Okay. John Tucker, thanks a lot. Alex Taylor alongside Paul Sweeney. I'm getting some fist bumps in the control room, so, there's something there. All right, if there's one column you read in the morning, you only have time for one. The one you got to read is by John Authors, Bloomberg opinion columnist. I've been following his work for decades, ever since he was at the FT and then here, and he really has a definitive take on what you see and what you take, and he also sort of collates all the research and pulls out the most relevant parts to create a story. And luckily, he's right here in the studio and joins us. John, how hard was it? First of all, were you up all night?
No, I did bump into a few cleaners and stuff on my way out of the office last night. But I was out before midnight. But I heard that he, David Gura, people that we In all respect, they were here late last night working, cranking it out.
Yes.
Yeah, because you couldn't do anything until you saw the announcement, and then you had to get the research in to sort of create the story behind all of it.
But I did explain to him that we were in the office late enough that Bloomberg would pay for a cab home.
Oh, yeah.
I costed Bloomberg a little bit of money there by breaking them into that secret, but yes.
But it totally is worth it.
Yes.
Okay, so you kind of laid the land last night. Tell me about your column, and then how are you going to be walking it forward today?
Okay, the column is channeling John McEnroe, who was brought up only about a mile away from Donald Trump in Queens. Yep. You cannot be serious. Basically, the biggest point that you can make lots of general arguments about what the US tariffs have been, but the main point about them is that they're not serious, that this is ridiculous. They are not reciprocal in any sensible definition of the term. They are simply a retaliation against any country that happens to sell more stuff to the US than the US sells to it. They don't actually have anything to do with trade barriers that are put up, and they're based on a rather
this is a globalist view that spin. Totally wrong.
Run a trade deficit with anyone, that means you're being exploited by them, that it can only be because they're doing something unfair rather than because they have some comparative advantage, a concept that's been around for about 200 years, that means that they can make something cheaper than you can, and if you buy it from them, you can then go and invest in something better yourself. So the prime problem with the rollout is that it's not serious. It's very difficult to negotiate because the reason you are being tariffed is because you happen to have a trade surplus with the US. So, for example, if you're Bangladesh, you kind of would have a big trade surplus with the US because you're a very poor country that can't afford stuff from the US, and you have people who are prepared to work for very little money and will make your exports appealing. It's not clear to me what you are supposed to do about this sudden apparition of 30-40% tariffs on you from the US. In terms of where we're going next, plainly there is an expectation that there will now be negotiations, that this cries out as an opening point for negotiation. The problem is that the tariffs are so ridiculously high and starting so soon, and have been presented in a way that makes it very difficult for a democratically elected politician to immediately cave into them. You do not make yourself popular with your voters if you roll over and accept make big concessions to a bully. That's generally not the way electorates like to proceed. So I doubt that we're actually going to get much in the way of negotiations, simply because this isn't serious. The big issue or the big concern that people have been talking about to me today, which I will probably be writing about tonight, is the dollar. Normally, when you have something bad happen, the dollar goes up. It's a safe haven. At the moment, you're having a really big fall in the dollar at the same time as stocks are going down. My suspicion is that that's ultimately because capital moves much quicker than goods can. The US has actually, it's been at a trade deficit, but boy, has it been a surplus when it comes to capital. People have been putting lots of money into the US. If you are now in a situation where you have to take profits...
Why do you assume that a flow of funds would go out of the United States if we were building manufacturing here? I mean, come on.
Where's stocks? That will cause the dollar to go down further. That leads to a risk of a vicious circle, or what George Soros would call reflexivity, the notion that markets can create their own reality. Once people lose confidence in the US as this piggy bank for the world, they start taking money out, and that becomes a self-fulfilling prophecy. That was the guiding principle that George Soros worked by, and we all know that Scott Bessent worked for George Soros for whatever it was, 20 years. Yep. That is the great fear that the US has been running a big trade deficit, but the other side of that is that other people have given it vendor finance, that they've spent a lot of money here, they've
directed a lot of money to the US, which has made life a lot easier. That's not raping and pillaging or whatever the phrases were that Trump used.
30 seconds. Is there any risk that the US dollar ceases to be reserve currency?
No.
Realistic?
No.
Realistically?
No. Come on.
Yes, but a very small one. Okay.
See, he wants to hedge his
really
bet.
need to jump up and down on the trust that people have in this country in a quite dramatic way for it to lose that status. It's conceivable at this point that it can happen. I still regard that as very unlikely. There's certainly plenty more moves, more throws of the dice before that happens.
All right, John, we got to leave it there. Always a pleasure. Can't wait to read your piece later on today. John Authors, Bloomberg opinion columnist, joining us there. All right, coming up, we're going to...
When the shit hits the fan globally, where are people going to flock to? The United States. You think they're going to be flocking to China? Get real. Please go to my store, the-studio-reykjavik.com, and get the probiotics that I offer. I have it in veggie cap and also in powdered form. Taking a good probiotic every day is very important. Why? Because with a good gut biome, you're going to improve your energy absorption. You're going to improve your immune system. Your mucosal layer in your inner lining of your gut will improve, get thicker. With that proper population of microbiome in your gut, you'll also improve that immune system. Your IgAs, which is a type of antibody, will have higher concentration. And with a good gut biome, you're going to have better communication between your gut and your liver and your gut and your brain. So your overall health is going to improve. Your skin, your hair, your nails will improve. You're going to have less irritability. You'll sleep better. Your stools will be more consistent. And with taking a good probiotic every day, it's a good foundation to build the proper health that you need. In the United States, we have many people that are eating improperly. All right, it's called the SAD diet, the standard American diet, and it's destroying the gut biome. So you need to improve your gut biome by taking a good probiotic, like the veggie cap version that I have here, or the powdered version that you can mix with soft foods or with filtered water. But take it every day. It's really important. But also filter your water and reduce your intake of the SAD diet, especially with products that are heavily processed. Processed foods have lots of chemicals in it, and they do disrupt your gut biome. So you don't want to do that. So filter your water, reduce, eliminate those processed foods in your diet, and also take a good probiotic. Use discount 5 and you get $5 off. If you spend $150 or more on my store, the-studio-reykjavik.com, you do get a free gift until supplies last. All right. I want to take a look at another video here. I'll tell you, the ultra-lib media is so anti-Trump. It's unbelievable. All right, let's do the Hill. We haven't played the Hill lately, so let's go to the Hill.
Well, President Trump followed through yesterday on one of his campaign promises. He imposed sweeping tariffs on practically every country in the world.
Of course, there are many concerns that his tariffs will drastically impact markets and raise prices at home. But the president seems to think there's a brighter future ahead.
We truly can be very wealthy. We can be so much wealthier than any country. It's not even believable. The United States can no longer continue with a policy of unilateral economic surrender. We cannot pay the deficits of Canada and Mexico and so many other countries. We used to do it. We can't do it anymore. We take care of countries all over the world.
No, think about that. Think about it.
We pay for
all right. He's got a good point, but he doesn't go deep enough with it. You have problems in Canada where they won't be able to fund their government if it wasn't for this unfair trade practice that's going on with the tariffs. All right. Now, You have big finance, institutional investors purchasing the sovereign debt of Canada. They need to be paid. So they have these higher interest rates, right? And so they use unfair trade practices with Canada to sell goods into the United States to be able to pay the Canadian bondholders. See, it's about globalization. It's not about the middle class. Stop pretending that it is. The mainstream media is going to try to keep on scaring the middle class, consumer, prices are going to be higher, but it's all about the globalists. They have the most to lose. If Canada defaults on their debt, then the bondholders, the institutional investors, are going to be taking a haircut. And they don't want to do that. That's what this is all about.
They think they have to pay, and then when you want to cut back a little bit, they get upset that you're not taking care of them any longer. But we have to take care of our people, and we're going to take care of our people first, and I'm sorry to say that.
Here's a list of some notable Trump tariffs. Of course, the most eyebrow-raising one is the 700% tariff on rice from Japan. Trump's tariffs on China are up to 54%. Then there's a 20% tariff on the European Union, 32% tariff on Taiwan, 26% on India, 49% on Cambodia, among others. Trump is also imposing reciprocal tariffs on 60 countries that will take effect on April 9th.
Of course, while some of these countries vehemently disagree with Trump's approach, Treasury Secretary Scott Bessent had a message for them.
My advice to every country right now is do not retaliate, sit back, take it in, let's see how it goes, because if you retaliate, there will be escalation. If you don't retaliate, this is the high watermark.
The Chamber of Commerce's Executive Vice President, Neil Bradley, said in a statement, "What we have heard from businesses of all sizes across all industries from around the country is that these broad tariffs are a tax increase that will raise prices for American consumers and hurt the economy."
For U.S. Trade Representative under former President Bush, Robert Zoellick, he said beyond the direct impact of the tariffs themselves, the constant flip-flops create confusion, adding a cost of uncertainty that impedes planning, especially for small businesses. What's more, the inevitable retaliation some are already seeing will hurt America's successful exporters, especially farmers and cutting-edge machinery and service industries. Speaker Mike Johnson, on the other hand, defended Trump's move. Writing on X, President Trump is sending a clear message with Liberation Day. America will not be exploited by unfair trade practices anymore. These tariffs restore fair and reciprocal trade and level the playing field for American workers and innovators. The president understands that free trade only works when it's fair. So here we are, Niall, and I'm in the unenviable position of being, the right of center commentator, but I do not agree with everything the Republican Party does or that Trump does, just as you don't agree with everything the Democratic Party does or Biden or Kamala Harris do. This is maybe the singular issue in which I am most at odds with what President Trump is doing. Now, I am not alone in that regard, as are virtually all leading conservative intellectuals, free market economists, editorial pages. And I know it's not, and I hear that, so just whatever big business wants should be the country's policy, and I don't agree with that. And when Trump says, we bail out, we pay for these countries' militaries and all those things, I'm like, okay, well, cut that. Then don't do that. That is just directly giving our money to other countries. Let's cut that out. I'm all for it. But the reality is that the tariffs are tax increases. They will make things more expensive for working Americans. They will make it harder for small businesses because our economies are so integrated across the globe. Even if you're doing something that is narrowly good for one industry, well, what if that industry relies on lumber or steel or machine parts or food or energy that is coming from somewhere else in the world? So now you're raising the cost of that. We're basically all just deciding that everything should be less efficient and more expensive for everyone everywhere. The best possible result of this would be for everyone to admit the tariffs are a bad idea and for other countries to get rid of those as well. I hear Trump on if they're so bad, why are they doing it? Well, they shouldn't be doing it either. But just because they're shooting themselves in the foot doesn't mean we have to do that too. And so I hope the response to this is okay, let's all end tariffs. But in the short term, this is going to hurt very badly.
Yeah, and I think it is one of those issues where Trump's propensity for sloganeering or for easy solutions easily leads itself into very self-defeating conclusions and self-defeating policies. Because his argument, well, he has actually two arguments that are in conflict with one another, in my view. One is the idea that this is going to revitalize American manufacturing. If that's the case, you have to keep tariffs in place for years while factories get built and supply chains change and all of that. Then the other alternative is, well, it's this sort of Trump flexing of the muscle to draw concessions from other nations. Maybe it's that, but if it's that, you want a quick fix and you don't want it dragging on for years. But I think sometimes some specifics are useful in this, and I was looking up Bangladesh at random. There's a 37% tariff imposed now in Bangladesh. The main export of Bangladesh to the United States is garments, t-shirts and all the rest of it. The average wage in Bangladesh is $213 a month. The average wage in the United States is about $5,500. Now, obviously, factory workers lower than both those levels, but there isn't any conceivable tariff or any conceivable price point that makes that a viable option in the long term, that we're suddenly going to revitalize the American t-shirt making industry. That's just simply not going to happen.
Yes. And if they were, and let's say they're what we were bringing in from them was some other product that is essential to some other business, that then you can always narrowly benefit one firm. I mean, the U.S. government could just say, here's $1 gazillion for whatever company, and you would make it economically profitable for that company to hire more people and build more factories at the expense of, it's the seen cost, the seen benefit versus the unseen cost, right? Okay, but then what are you crushing with the heavy hand of government in order to support that one thing? Generally, a competitive market is the best. They're not perfect, and we need government intervention for a variety of reasons, or to just provide general welfare to people. But pretty much the last century has proved the government being overly involved in trying to make bets about which precise firm or industry needs this much support and which one doesn't, and having it all done through a central authority creates crippling poverty.
IRS e-file is now open. Snap your W-2 and file your taxes 100% free. Plus, get your biggest refund.
I disagree, because you need the economic clustering to have a vibrant economy. And the only way to do that is to bring back manufacturing. It's really simple. Obviously, he hasn't worked in
every time.
And actually worsened the Great Depression back in.
You know what it is you got these pseudo-intellectuals. That don't know how to engineer anything or build anything. I bet when their toilet doesn't work, they don't know how to fix it.
Time when it was a catastrophe.
Yeah.
So, it's a big problem.
And if you want to look, I hear, people like my friends like Batya Ungar-Sargon, who these are the kind of policies she wants, and she's out talking very eloquently in their favor. I hear you on the working class has taken some hits, and all of the benefits that have come from globalization and free trade. That people on the left, and then some people in my own kind of new right coalition like Batya will say, but are those benefits just going to already wealthy people? Are they really going, to the working people? But what it's going to take to be able to have factories and factory jobs here again is not going to be tariffs that are done for diplomatic reasons, as an FU to Canada or whatever, because that's not enough certainty to start the
he's missing the point.
Building a factory.
We are in a new revolution. The American rebirth, the America First agenda, however you want to call it, is the new revolution against the globalists. And the globalist is no different than the King of England back in 1700s. That's what we're reliving through. Come on, Bobby, wake up.
Long-term business plan. What it would actually take to do that, it can be done, but it's things people on the left don't want to do. And in terms of NEPA, environmental protection, I think even some of that, maybe you could get left or progressive people on board with getting away with. This new Ezra Klein book on abundance has so many examples of just pointless. You need an environmental action impact report on anything, even things that have nothing to do with the environment, that just slows everything down. If you got rid of some of that, you could make it possible to maybe relocate some of these factories in the U.S. and other permanent fixes like that. the tariffs are not going to be a permanent fix because we're not even talking about them as being permanent.
Right.
Listen to Scott Bassett there. He's like, well, just hold on. This is being done for a reason.
Sure.
Bear the pain now.
This is about negotiation to either normalize trade, and some of the jobs are going to be coming back to the United States. It's a multi-vector strategy.
It's an entirely different argument. If it's like 5 days of pain and then the rest of the world gets rid of all their tariffs, yeah, I'll say it was a success. I would be the first one to say, great, I'm glad. But that's not going to be about a industry building policy
here. It's not so going to regenerate American manufacturing. Also, like, this is a separate conversation in a way, but part of the reason that American manufacturing and manufacturing generally has declined has been the rise of automation. It hasn't purely been the stealing of jobs from overseas.
It's been, there's
automation.
Wait, the other thing is building stuff, all right? Some of it, if it is high volume, is going to be benefited by automation. If it's low custom made stuff, you can't automate it, or it's harder to automate. The reason why jobs were being shipped away was because of the labor arbitrage. I mean, what are the globalists saying? They have to do it in a low cost region for a couple of reasons. One, less regulation, which is a big problem in the United States. Just businesses are way too regulated. And two, the labor arbitrage. Now, some of these factories that are overseas are doing automation. But why are the globalists so focused on labor arbitrage if it's about automation? Because it's not about automation. And not just that, when you're building stuff in your local region, you're going to have economic clustering. That's where the magic happens. It's not just the manufacturing coming back. It's the peripheral industries that help with that plant and the mom and pop shops that service that economic cluster. But of course, these clowns don't know anything about economy.
No, and the broader public are willing to bear the short-term pain that we're already seeing. The stock market was down at its open about 3%, I think, in the S&P 500 instantly. So
there's no sure way to wreck your mandate to govern by harming the economy. Right. It's the economy, stupid. The Bill Clinton insight is correct every time. Yeah. So we will see how this goes.
Most manufacturing in the United States is what is called light manufacturing. And light manufacturing is not automated heavily. It's heavy manufacturing that's automated heavily. And of course, that nuance isn't expressed by a bunch of pseudo-intellectuals because they don't know how to fix their own toilet. Please go to my store, the-studio-reykjavik.com, and take this stack to help improve your bone health and also your cardiovascular health. D3 helps to absorb calcium. It's also a gene expression cofactor, very important for your cells, and it helps to get cells to go into apoptosis, especially if they're infected. D3 can be coupled with vitamin K2, MK7, and when you couple that, what will happen is that you can pull out some of the calcium depositing that's around plaque formation at the vascular level and also reduce the chances of further calcium depositing. All right. D3 also helps to absorb calcium, and it improves its efficacy of doing that if you take the magnesium that I have in my store. You can take the magnesium through the Boomer Boost, the vitamin C and magnesium, or the magnesium and zinc. The highest concentration of magnesium in my supplements is through the magnesium and zinc. Now, D3 and K2 will help with the vascular health, but also if you do resistance training and take in calcium supplements or drink milk, right, what will happen is that you'll be able to get more bone density. And again, if you take it with magnesium, you're going to get higher efficacy with the D3. Plus, magnesium will help with your brain health, so that's a dual purpose with the magnesium. So take the supplements that I have that have magnesium in it. Now, D3 and K2 will help with the bone health, improve that bone density, do that resistance training, And it's important when you're doing the resistance training, not just to do weight lifts, but also to add vibration to the bone. So doing jumping jacks, running, doing leg lifts and doing like toe, calf lifts and have your heel hit the ground will add a vibration to the leg, and that will help to stimulate bone matrix depositing. Also, do exercises that may add a little bit more vibration in your forearms. That can be done by biking, especially outside. If you're hitting some bumps through the handlebars, you're going to feel that vibration. Playing tennis will also help to build that bone density in your arms, because you're getting that vibration when you're hitting the ball. So those are really important. Those calf lifts I was telling you about with the vibration through your legs, you're also getting vibration through your spinal cord. So you're going to add bone density there. That's really important. So take these little tips to improve your bone density. All right. So D3 and K2, do the resistance training, do some that vibration exercises that I was telling you about. And to also stack nattokinase to help boost up the cardiovascular part of the stack. Nattokinase will break up clots, it's fibrinolytic, and it'll help to improve your lipid profile. It'll help to lower LDL levels and increase your HDL levels. All right. When you have plaque buildup, you get turbulence in the flow of the blood through that plaque formation, that blockage, and that turbulence can lead to clot formation. So that's bad. All right. So you want to take nattokinase to reduce that, but also you want to bring down your LDL levels and increase your HDL levels to reduce plaque formation. So a great stack for cardiovascular is the nattokinase, the K2, and the D3. And a great stack for the heart health is the D3 and bone density is the D3 and the K2. Remember taking the magnesium supplements on my store, the Boomer Boost, the vitamin C, magnesium, or the magnesium and zinc will add to the efficacy of the D3. So please go to my store, the-studio-reykjavik.com. If you spend $150 or more on my store, you will get a free gift until supplies last. Use discount 5, you get $5 off. I also have a longevity box called the cardiovascular, the longevity cardiovascular health box. Get that. You get more supplements than just this to help with reducing the chances of building up plaque, and over time, you can shrink the blockage. All right. You can't shrink it 100%, but you can radically diminish that blockage over time with proper diet, proper exercise, and proper supplementation. So take a look at that cardiovascular box that I have, longevity cardiovascular box. All of my anti-aging and longevity boxes are at a discount compared to purchasing the products individually. So it's a great way to save money. And you can put discount 5 on top of that. So take advantage of the ways to stack this stuff. And again, I tell you how to stack this stuff so you're targeting multiple systems at the same time. You get more money. You get more benefit for the money you're investing in your health. Please go to my store, the-studio-reykjavik.com. All right, let's go to balance of power.
A little bit before you dump it on the product that has actually been impacted directly by the tariff. If you're a small business owner, it's a lot different. Michael, we're going to have one coming up here. The founder of Port City Brewing, it's a great, an award-winning brewery in Alexandria, Virginia, right across the Potomac from here. And he's having trouble getting bottles. The kegs are coming from Germany. The malt is coming from Canada. If you're a business operator like that, let's say, you need agave from Mexico or whatever it is, you have no choice based on the product that you make. Do you have any choice other than to pass it along to the consumer?
No, you don't really, especially if you're a small business that doesn't have big margins where you can absorb something. And the problem for a lot of people is there are things that are not made in the United States. We're not growing agave, so they got to go somewhere else. And a lot of the malt comes from overseas, from Belgium. So there's a real problem for many businesses here. They're going to just have to pass these prices along and hope Americans accept them. And
we saw with the post-COVID period that people didn't accept them, but they had to pay them. And we may be in that situation again, which will create a lot of unhappiness. It'll be interesting or scary to see whether people blame companies or whether the blame is focused on the White House.
Mark Carney, of course, the Canadian Prime Minister, spoke a short time ago. We actually got some news putting a 25% retaliatory tariff on U.S.-made vehicles in response to what happened yesterday. We heard from the Prime Minister. Here's what he said.
Three different sets of U.S. tariffs remain in place and will continue to pose significant threats to Canadian workers and Canadian businesses. And while they have been imposed under different premises, some things are consistent. They are all unjustified, unwarranted, and in our judgment, misguided.
Michael, I know that you're not just an economist or an economic expert, you're also very sensitive to the political side of this story. You understand politics in Washington. When you hear a remark like that, this is the Prime Minister, by the way, who was told by Doug Ford, as he explained to us on Balance of Power last evening, he asked the Prime Minister not to respond. The train's left the station here politically. What happened in the last 24 hours to our standing in the world?
Well, our standing in the world plunged. It was already bad, given the run-up to this and the way the world's been reacting to everything that the president has done, particularly on the defense side.
Of course, yeah.
But now it just cripples us with an awful lot of people. And part of that is also the uncertainty, because we don't know what Mr. Trump wants out of this. Is it that he wants to bring factories home, in which case you need to leave these tariffs on forever, because otherwise companies are just going to wait it out? Or is it a subject to negotiation situation where countries can do what Mr. Ford suggested and not retaliate and try to negotiate something?
Or maybe it's all of the above.
There are a couple other things that the president is talking about tariffing that would have a big impact. One is pharmaceuticals and the other is lumber. Lumber, of course, a long-running dispute with the United States. But Bloomberg wrote a story the other day that was kind of fascinating. There is an ingredient that goes into toilet paper that comes from Canadian softwood, and something like 30-35% of all the toilet paper in the United States is made from this stuff. And if it goes up in price, you're going to be paying a lot more for toilet paper, or you're going to have shortages. And that'll get people's attention.
Yeah, get ready for the sandpaper, ladies and gentlemen. Boy, what's the Fed doing right now? Mike McKee, in our last minute, do they have the spreadsheets all over the floor and the green visors out, or are they drinking at Bobby Vans?
Well, I assume they have the spreadsheets and green visors, although Bobby Vans might be more fun. That's pretty much what's going on all over on Wall Street. All of the economists and analysts are trying to analyze what it means for the economies and the companies they follow. The Fed is doing the same to try to trace through what the impacts will be. Not just the first impacts, not just you go to the store and pay more for toilet paper, but how does that affect other products and other purchases you might make down the road? The feeling is, according to JP Morgan Chase, that people's disposable income is going to go negative in the next quarter. And people are going to just pull back on spending. And the Fed will have to decide, is inflation a bigger danger or growth a bigger danger?
One of the most important voices you'll hear today on Bloomberg. Michael McKee, great to have you back, sir. Bloomberg International economics and policy correspondent with some real context, some real perspective on what the heck is happening here.
We're going to go to Steve Forbes. Please go to my store, the-studio-reykjavik.com. Get the olive leaf extract. This is a dual-purpose product that helps your immune system and your cardiovascular health. It brings down inflammation that helps reduce building up plaque when you're reducing inflammation at the vascular level. And when you're reducing systemic inflammation, you're helping with your immune system. Olive leaf extract also helps to bring down your LDL levels and increase your HDL levels, so you're reducing the chance of plaque formation. So take olive leaf extract every day, really important. It's a dual purpose. Now, you can stack it with a multivitamin, and that's a great way to build a base for your health. You're getting the multivitamins you need, but also you're helping your immune system and your cardiovascular health. Now, with a multivitamin, multivitamins and minerals are really important for cofactors for enzymatic activity. You need to take a multivitamin every day. Very important. Take a look at my label here. All right, you're getting the multivitamins that you need as a great base, and then you add to it based on the other supplements that I offer. All right, but this is a great way to start. This is an easy to digest multivitamin. So please go to my store, get this multivitamin, take it every day. And a great stack is to take the multivitamin and the olive leaf extract together. And it's a dual purpose. You're building a good foundation for your enzymatic activity, but you're also helping with your immune system and your cardiovascular health. So please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off. If you purchase $150 or more, you will get a free gift until supplies last. Please go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos. So let's go to Steve Forbes about tariffs.
You know Harbor Freight for affordability, but durability goes right along with it. You see, we test, and then we test again. Now it's time for you to put us.
Media chairman and editor-in-chief. Steve, where do you want to begin with this? Because those numbers, I've bumped into Larry Kudlow on the way down here, and he said it was important to show how, my words, other nations really screw America, whether it's through tariffs, non-tariff barriers, and also currency depreciation, for him to illustrate that. But to hit back, for us to hit back via tariffs, this will be, in the short run, disruptive.
It will be, and the initial costs are roughly what he outlined today, $400 billion. We're still trying to get the details. He's already put on tariffs, raising about $150 billion. So you got revenues on paper coming in at $550, $600 billion. And some of those countries will be reducing their tariff rates. But I think this gives a spur to our friends in Congress. You got $600 billion revenue raiser here. You have disruptions to supply chains, so raise it to $1 trillion. Add $1 trillion of extra tax cuts to the bills you have in the House and the Senate. You could get rid of the capital gains tax. You have massive cuts in the corporate tax and the individual tax rates. Remember, and then tell Congress, stop fooling around with the idea of raising the top income tax rate. They say that'll hit the rich. No, it hits small businesses and medium-sized businesses, which are so-called pass-through corporations. So if you're putting in these tariffs, you got to offset them and then some with not only a big, beautiful tax bill, but a big, beautiful tax bill on steroids. Double it, triple it.
On the tariff policy itself, Trump clearly deeply believes that this will be successful, and he lays out how. And I think watching him today, it feels a bit intuitive. They do it to us, we do it to them. Fine. High risk, high reward, but there's a downside risk as well. What does a positive outcome look like for the U.S. here? What does a negative outcome look like?
Well, the positive outcome is that countries start to reduce their tariffs, and I think they're going to get into the innards of how those numbers were calculated, because when you take non-tariff barriers and currency and all of that kind of thing, it gets a little fuzzy. So I think other countries will respond, and hopefully big responses, and then it's essential to get that big tax cut bill through, because if that happens, then we can have better sailing ahead, positive sailing. That's why a lot of us thought, gee, why didn't they do the big tax bill first and then bring in these tariffs so you'd have a tailwind for the economy instead of a headwind. So it's about timing, it's about detail, and how countries quickly react, and what kind, given their own political situations in those countries, retaliations. They're talking about services they think they can hit the U.S. on. So hopefully this thing will now go to the negotiating table, and they'll be reducing rates, and we'll make these things just a brief thing, few weeks, rates are reduced, big, beautiful tax bill. We can breathe easily again, not have to wait for the future.
But just a reminder, only about 12 to 14% of our economy is from imports.
Yes.
But you look at a Vietnam, 90% is from exports. So it goes to what President Trump has talked about, is like these countries have a lot to lose and they have a lot to gain from talking to us and negotiating with us. But
that's why a country like Vietnam, I think you'll see some big reductions in terms of their rates.
And you can,
but the key thing is, though, what hasn't been, I don't think, factored in properly, is what it does to supply chains. You've got a lot of small companies with small margins. that are going to be hurt by this, put out of business. We saw with COVID, with the lockdowns, how disruptive that can be. So the quicker they can get this thing resolved and get those rates down around the world and get that big, beautiful tax cut bill that now must be doubled, then we'll come out of it and we'll have a better trading system.
But the exporters will likely eat at least half of
But
these
they can't
tariffs.
do that forever. And the thing on like the 25% tariff on autos, eventually U.S. made autos go up in price. It happens every time. If the ceiling goes up, everyone raises.
So talking about the tax bill, since you brought it up a few different times, there's all this sort of DC jargon, people's eyes glaze over. One bill, two bills, reconciliation, Senate
I have a
parliamentarian.
cattle prod under the desk. If you bring up parliamentarian, I zap you.
Okay,
In
well,
the badoobies.
you just did. My badoobies are now painting because of what she just zapped. This is behind the scenes at the bottom line. You never knew this until right now. But my question is more political and messaging wise. Are you surprised, as I am, Steve, that Republicans in Congress, I know they keep saying we're going to get it done, it's important. There doesn't seem to be across the board the type of urgency in warning the American people that if this doesn't happen, there's the biggest tax increase in history across the board. I feel like that is like banner headline number one.
And that should have been the theme on day one. There's that, but there is a lack of urgency on that. And the typical families can have a $3,000, $4,000, $2,000, $4,000 tax increase. And most people, polls show this, most people don't know what's in store for them if this thing isn't done. And why aren't they proclaiming that every single day? New ads on it. And so far, the White House has not pushed this potential tax cut the way they did in their first term. And so they got to get their act together and start pushing it big and make the point that you precisely made, a massive tax increase, not just the rich, but small and medium businesses, and every single middle-class household in this country is going to get slammed and slammed hard if that bill doesn't get passed.
So what we got out of the Senate leadership today, who met with President Trump, the kind of behind the scenes. So the Senate has come out with its budget framework. It'll vote on it this week. It is step 3 out of 8 in cobbling this thing together. It is the permanency of the existing Trump tax cuts. It's about $3.8 trillion. But then they set aside an additional like $1.5 trillion for more tax cuts, $5 trillion plus in tax cuts. And they didn't get into the nitty gritty of spending cuts.
Well, the $3.8 trillion is just going to keep what we have today.
Right.
And only in Congress, only in Washington, would they call keeping the same tax rate, cut. It's preposterous. So take that $3.8 trillion away and go to that $1.5 trillion. After what the president announced today, let's raise it to $2.5 trillion. And in spending cuts, the Doge, the Muscovites, are making real progress in identifying things that have never been identified before, where all this money goes. It's a form of money laundering, where they do it certain agencies, certain groups, and then goes to other groups and individuals. And it's the lifeblood for the far left of the Democrat Party. So go through with what Musk is doing. He's going to be here till the end of May. And he's outlined what the cuts can be. So I don't worry about what the House and Senate say about cuts. It's going to be the Doge is doing it for you.
And you
so
did
take what they do and run with it.
Steve, you didn't even say parliamentarian, so even a spare. She's got the button under the desk. So, Steve Forbes, thank you so much.
Unfortunately, that office exists.
Please go to my store, the-studio-reykjavik.com, and get the structural nano silver gel. You can get it in the tube form and the dispenser form, easy to use dispenser form. It's a dual purpose product. All right. It'll help to heal abrasions, cuts, minor burns. It'll also help with if someone is sick around you, not feeling well, you're not feeling well, put it on your hands, around your eyes, around your nose, around your ears, around your mouth, lightly coat your nostrils. It stays active for 5.5 hours. Really important to take in those kinds of situations. Make sure you have some at work and at home. And this can be used as an aftershave. Guys, after you shave, put it on your face. It'll help to soothe the skin. Females, you shaving your legs, use the gel, and it'll help to heal the razor burn. So it's a dual purpose product. You can be using it as a skincare, daily skincare. So please go to my store, the-studio-reykjavik.com. Make sure you have some of this at your house and at work. You never know when you need it. Please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off. If you purchase $150 worth of product, you get a free gift until supplies last. Okay, let's go back to Bloomberg.
Small independent breweries in the U.S., and most of us are faced with this issue because we do have a global supply chain. So, you know, if our costs go up, we need to pass that along to the consumer, unfortunately. And the way it works in the United States with alcoholic beverages, there's a 3-tier distribution system. There's the supplier, there's the wholesaler, and the wholesaler sells to licensed retailers. And that's mandated by the federal government that we can't sell direct to consumers. We have to use this 3-tier system. And each tier has their own margins and markups for the products. So if we're a 6-pack of beer that currently sells for $12.99, if we have to increase our price by, say, 20%, by the time each tier of the distribution system takes their markup, it could hit the shelf at $18.99.
Wow. A 6-pack for 18. It is good beer, Bill. Somebody's going to pay that, right? Just not as many as your fear. Could this put you out of business?
Yeah, I mean, even at $12.99, I mean, our beer obviously is a premium product. It's a high quality, full flavored beer, and people are willing to pay a little bit more for something of higher quality. But there are limits to that. You know, and I'm certain that if our beer is hitting the shelf at these inflated prices, then things are going to slow down.
Well, you're part of a community, of course. It's not just you. I know that there's a Brewers Association. I'm guessing you don't have the influence or the lobbying money, though, of an Anheuser-Busch to dial up the White House. How do you deliver a message? How do you push back on any of this, or can you?
Yeah, well, our Brewers Association has been active, and our CEO has been. He's traveled from Boulder, Colorado to D.C. several times since the beginning of the year. And so we are trying to get our message out. You're right. We don't have the millions that the big brewers have. But, you know, we are a Main Street business, and we are involved with our elected representatives. And I've reached out to our senators, our U.S. senators, as well as our Congress representatives to let them know what our concerns are and let them know that there's real danger here that for the negative effects that are going to occur with our business.
If you're listening to us on the radio as opposed to watching on YouTube, we've got images right now of Bill standing alongside Senator Mark Warner holding a 6-pack of beer outside the U.S. Capitol a couple of days ago. Nice going, by the way, bringing the 6-pack to Capitol Hill. I think, Bill, they could use a couple more of those up there. What's the senator from Virginia and maybe his colleagues suggesting as an answer to this? As your representative in Virginia, can lawmakers do anything? Did we lose Bill? Bill's frozen. The beer froze. Let's see if we can thaw him out. Yeah, we'll see if we can thaw him out and continue this conversation because he's an interesting guy. If you're with us on 99.1, by the way, if you're listening on the radio in Washington, D.C., Bill's only about 9 miles outside of the Capitol in Alexandria. And he's got a really interesting story to tell. Think of how many businesses there are like this, small businesses who are being impacted by these global changes.
Well, think about
They have
why don't you think about all those small businesses when you all those small businesses that went out of business when Walmart pushed globalization. When you think about that, more businesses were destroyed because of globalization than created because of globalization in the United States. But we don't want to talk about that, do we? I'm Bloomberg.
Get a bill passed in the Senate.
So pick a guy that has a local business in the United States that needs import material for his business. But Bloomberg doesn't want to talk about how many businesses were destroyed because of globalization in the United States. It's not just manufacturing, it's small businesses because they destroyed the economic clustering. Talk about all those mom and pop shops that went out of business because of Walmart.
It's the hard questions that freeze them up. Tell Bill I'm coming to visit him. Bill Butcher, I want to meet you in person. This is a great story.
Please go to my store, the-studio-reykjavik.com. Get the ubiquinol. Ubiquinol is the most bioavailable form of CoQ10 that you can purchase. In addition, ubiquinol will boost up energy levels, help with your mitochondrial health. It's an antioxidant, so it's going to soak up free radicals, and it will protect your neurons. Very important to take every day, especially if you're 40 years of age or older. NAD Plus supplement will help to boost up your NAD Plus levels. NAD Plus, when you boost them up, will help increase your energy. It will also help to repair DNA damage at the cellular level and at the mitochondrial level. And NAD Plus helps to protect your neurons. A great stack to help to protect your neurons is taking the NAD Plus supplement and the ubiquinol together. Please go to my store, the-studio-reykjavik.com, and get this stack. If you spend $150 or more on any order, you get a free gift until supplies last. Use discount 5 and you get $5 off. All right, I want to go to CNBC about the market tariff.
All right, here we go.
Long time no see.
I know what we're gonna do today.
Well, that's what the market is dealing with here. And you know, I was saying in recent days, one of the reasons the market was just sort of so concentrating all of its anxieties on the tariff announcement is because it bundled together all the things that the market's been struggling with. The risk of a deeper slowdown, the stickiness of inflation, and the possibility of erratic, capricious policymaking. It just seems about aggression and not about let's come to some kind of a better balanced solution. So I think we got basically the worst of what you could have thought you were doing. The market was taking a probability-weighted approach to say, let's price an outcome here, and we got something that was beyond the spectrum of what they thought. Now, what does it mean to me? I would think the question this morning is, why is the market down more? And I think there are good reasons why the market's not down.
Why isn't it?
Yeah. First of all, where we came from, okay? You already had a market that was falling for 6 weeks, more or less. You retested these levels. We undercut it this morning on the S&P 500. You had the median stock in the market down like 15, 16% from an all-time high. In other words, we weren't sort of stuck out on a maximum peak perch of excitement and enthusiasm. The other piece is, look, ultimately, we're more of a domestic services economy than we are purely trade-driven. But we have to keep in mind, we're asking the market to bottom right now at 20 times earnings that are likely going down. That's a tough spot to sit.
Jim was talking a 16 multiple on 26 numbers, which we mentioned would take you to just south of 5K.
Sure, if those 26 numbers, I mean, pick a number, right? But no, I do think, though, that the market has to sort of reserve this possibility that something here is contingent. They're going to say it's not negotiable, but
they're going to reach a pain threshold.
Right.
Yeah, they may or they may not. I mean, there is a belief, a thought out there that I've heard from others, and Jim echoed this as well, that this number, however you got to it, is simply designed to move manufacturing back to this country.
Right.
That is the ultimate goal. Now, it may be one that is ephemeral that you're really never going to be able to achieve. But if that's the case, and Megan's reporting is right now, maybe it's right a month or 2 months, 3 months from now. Maybe that's what the number's about.
I know, but to do that, you have to have companies willing to invest in the United States and to hire and to spend. And if they're dealing with now all of their supply chain becoming more costly and expensive, I mean, look at a Nike. Look what's happening in Nike right now. Yeah. Nike has its supply chain mostly in Vietnam, actually, and in China as well, where tariff rates have gone up past 50%.
Nike supports slave labor.
They're in the 40s on Vietnam, and then ask them to build a factory to build shoes in the United States, where labor's more expensive.
Look, and where the policy might change just as the factory comes online.
Well, yeah, it takes a few years for that. The other thing, I just find a little ironic about this, and by the way, this is a knock on President Biden and on President Trump. Both of them have anchored their entire economic policy agenda around a return of manufacturing in the United States.
One was a carrot and one was a stick.
Both of them
are lost in this world where the future of manufacturing is automation and robotics, which I know you've talked about, but it's just like, are we really willing to risk it all for that? My other point, on the formula
But
thing.
when you bring the manufacturing here, you have subsystems being built, and you have light manufacturing clustering, and you have peripheral businesses supporting that economic clustering. That's the benefit and the scaling effect of bringing manufacturing back. So stop focusing on just the final assembly. But of course, stupid people don't understand that.
Just to hammer this home a little bit more, state to state, U.S. states have deficits with each other. They're not cheating each other on trade and on tariffs. I mean, that just as a simple explanation for why these tariff rates, I think,
every time you have a trade deficit with your hairstylist, guys. Does that mean you need to learn how to style hair?
Right.
We settled this hundreds of years ago. I mean, whatever the blunt instrument is that they're trying to use in this scenario, if it even worked, you'd be having the U.S. economy go down the value chain. Okay, your iPhone is designed in California and it's made in China, and that's worked out pretty well for us.
I just want to mention the U.S. dollar because there's a lot of noise about the dollar right now. And it's weak.
Yes,
it's weak, and people are wondering, okay, this was not supposed to happen, right? All the economists, all the strategists, U.S. tariff rates are going to go up, and the dollar's going to strengthen, and that's going to offset it. Guess what? The dollar's down 2%. That's a huge move. Why? Well, I think the 2-year yield tells us a little bit about there are expectations that the Fed is too restrictive and they're going to have to lower rates because they're more worried about growth now than about the inflationary impact. By the way, inflation expectations are rising too. But dollar weaker on worse U.S. growth, on Fed needing to cut, on U.S. assets not being as desirable.
Well, that's the thing, because our trade deficit gives dollars to the rest of the world, which comes back into our financial markets and finances our deficit. So there's a lot of links in this chain. I agree with your take on it, though. The market is, yes, 1-year inflation expectations are going up, but the bond market is just not pricing that, really. The bond market's pricing the risk to growth and what the Fed's going to have to do. Yes.
More weak growth. I don't think it's losing safe haven status. Gold's not going up today.
I mean, look, if we're above 100 on the dollar index, we were there not that long ago, so.
Sarah, you don't believe, though, the theory that it's just about getting rates down, that's really all it's about? Because you've heard it. I'm sure you've heard it. Everybody wants to talk about that.
They're getting the rates down.
Yes.
They're getting the
burning
rates
down
down.
the house to cook a steak. That's the line.
I think if you have followed President Trump since the 1970s, it's been the trade ripoffs, and this is very consistent with his views.
Yeah, right.
Mike, thank you. Mike Santoli.
I totally agree with Trump. Please go to my store, the-studio-reykjavik.com. Get the clarity factor. This will get rid of that brain fog. This will also help to support your memory. When you are getting rid of that brain fog and you can concentrate it at work or in school, or even if you're retired, the tasks that you're doing, you'll be able to fully put your attention to those tasks. And you're getting those neurotransmitters firing from your neurons. And when you have more neurotransmitters firing, you're going to get that positive neuroplasticity. It's really important to also do some cardio to get good blood flow going to help with that blood flow to your brain. But also learn new things, all right? Take a subject that you don't know much about, read, write, talk to people in the real world, and that's going to help you with that positive neuroplasticity. Another thing that's really important to do is do balancing exercises, stretching exercises, and resistance training, not just cardio, because all those modalities are going to help with your neurons. It's like, for example, with cardio, you're going to get the better blood flow. So that's going to nourish your brain better. With resistance training, you're activating certain neurons that are contracting the muscle. With balancing, you're activating your cerebellum and you're activating those neurons for kinematics. And with stretching, you're actually activating a different set of neurons that are at the ends of your muscle. So it's really important to do all 4 modalities, learn new things. Some sort of spirituality or mindfulness is really important also for better brain health and proper sleep. With proper sleep, you'll consolidate memory better. You'll detoxify your body, especially your central nervous system, and you'll be well rested. So take Clarity Factor, get rid of that brain fog, and get those neurotransmitters firing to improve your memory, help support that memory, and get that better neuroplasticity. Take this every day, really important. Now this is a great stack where you're helping with your brain health, but also taking Myotrol will help with your musculature. Myotrol has flavonoids, polyphenols, and lignans to help with gene expression for building up muscle and maintaining muscle. Really important when you get older. Do some resistance training. It stacks really well with Gladiator barley because the Gladiator barley would be the high density protein to build the muscle. The Myotrol helps with the gene expression. But do some resistance training. Take the Myotrol. You're maintaining that muscle and building new muscle. And taking the Clarity Factor is going to help with the brain health. So this is a great stack where if you're older, you're helping with your brain health and your musculature at the same time. Please go to my store, the-studio-reykjavik.com. Use discount 5, all caps, discount the number 5, you get $5 off. And if you spend $150 or more on my store, you get a free gift until supplies last. All right, let's go back to Bloomberg.
Reciprocal, Rick, you're seeing the reaction in the markets here. Did the White House just make a horrible mistake?
Nope.
Well, I don't think they think it's a mistake in the sense that this was completely predictable and predicted by virtually every economist and analyst that I saw, both on our program and others, as to what would happen, not knowing even the scale of these reciprocal tariffs that were announced yesterday. So I think that everybody in the White House maybe had to brace themselves for this outcome, but the outcome was virtually certain to be disruptive to the public markets, and obviously that's what's come about. And this idea that you just quoted the Treasury Secretary on the idea of, oh, don't panic, these are the highest levels you're going to get, and what you really are is just getting certainty now. Well, this is the only thing that the markets have been asking for, is give us some certainty. And this is not certainty. I mean, this was not presaged by the White House. The idea that they sort of just sprung these levels on and included, as you say, so much of the rest of the world, but not, people who are already currently in trade negotiations. I think Mexico's in the same category as Canada on that. And did not include any kind of increased trade tariffs on sort of those who have sanctions, Russia, North Korea, China, Iran. It's anything but certainty. And so this idea that don't panic, everyone is panicking. The White House has made us do that.
Are you panicked, G?
I like your chart, Joe. Brendan did that. It's very nice.
It's pretty nice.
It's very nice. A big, beautiful chart, Joe Matthew. Of course,
that's what I got.
Very bigly. When we look down at the numbers, of course, we see the fallacy of what is on that chart. And that has been, took people only a few minutes after the president held it up yesterday to talk about that. But just to talk about what you were just asking, Rick, I am a little bit panicked, but this is an enormous, enormous mistake on the part of the White House. And, to hear Howard Lutnick come out just a few minutes ago and say, nothing to see here, don't panic, relax. Well, when you are putting tariffs on 10% on tiny islands that contain, as far as anybody knows, penguins and seals, and you're telling us, trust the president, he knows what he's doing, it is not engendering a good deal of trust in any of us. And so, yes, panicking slightly, Joe Matthew, and hoping there is a way to walk this back, but he is so committed to it, I am not sure there is.
So you're worried about the penguins, Jeannie.
And the seals.
You might have seen
Feels out.
Where are they going to shop, Rick? Did you see these wide-ranging tariffs hit the barren Heard and McDonald Islands in the sub-Antarctic Indian Ocean? Turns out these are territories of Australia. They're covered in glaciers and have populations of 0 people. Tells you what about the process that went into this?
Yeah, the idea that we had to be surprised with the probably biggest economic decision made by the United States in 100 years. Why would we want to be surprised by that, right? Why wouldn't we have been brought along? And the preparatory work, this was presaged for a long time, right? Donald Trump's been talking about this Independence Day thing for a long time. There are hundreds of people working on this. The idea that you would produce a chart or a policy that includes penguins and not people is shockingly sloppy. And by the way, bad for the White House in the sense not just that it was sloppy, but that's all people are talking about today is we got tariff sanctions on penguins. For heaven's sakes, forget the fact that China's got 50% tariffs now. Our largest trading partner. So we got it all there. But again, I know I've been a bit of a, nagging drumbeat on this, but there are competency issues showing up every day around this administration. They have to get their act together. They can't keep slipping up. We can't have a story a day about mistakes that were made and taking all the attention off of what these policies are, because we should really be focused on those policies and the impact on American taxpayers.
I know Rick Davis knows a little bit about Alexandria, Virginia. Jeannie, you might have heard our conversation with the founder of Port City Brewing Company, who's sitting there with his award-winning beer that requires malt from Canada, bottle caps from Mexico, kegs made of steel from Germany, and I could keep going here. He can't get his hands on glass because everyone's buying that. They don't want to make aluminum cans because of those tariffs. If companies like this, and God forbid, I love meeting Bill Butcher. I hope that he finds a way to get through this. But if small companies like this start to go out of business, what does that happen? What does that do to the politics around this program and around this White House?
Well, they're absolutely devastating. And
where was the care of all the businesses that went out of business because of Walmart destroying small family businesses in local towns when they shipped their jobs to China? Walmart forced purchasers of different companies, all right, their purchasers, the purchasers within Walmart, forced their suppliers to ship their jobs overseas and import goods at a cheaper rate to be able to be in the Walmart store. And that destroyed manufacturing in the United States. And also the small communities, the mom and pop shops that did the peripheral businesses, they went out of business too. They don't care. Bloomberg didn't care about that. So why should we care about some beer company that might go out of business because of the tariffs on Canada? More businesses were lost with globalization. Don't care.
Famously, we're talking about bananas or eggs or coffee, Joe. You know I like my coffee. Yeah. We're all going to be paying more unless this is wound back. And the problem is, for many of us, it feels like we've crossed a Rubicon here where there is no good off-ramp. And that is what is deeply troubling to me. How could he walk this back at this point? It's hard to see.
4 hours ago on Truth Social, Rick, Donald J. Trump, caps lock. The operation is over, exclamation point. The patient lived and is healing. The prognosis is that the patient will be far stronger, bigger, better, and more resilient than ever before. Make America great again. I picture the bionic man coming up off the table.
Yeah, I was going to say that too.
How much space?
That's not that phrase that Trump did on Truth Social with his tweet. That sounded like the bionic man, the $6 million man. Interesting.
damage done politically. Just this week on Tuesday, lost an election. Republicans did, or at least, the perceived Republicans in Wisconsin. Never should have lost that race. Wisconsin, Donald Trump won. He should have been able to replicate that, but couldn't pull it off. So the bottom line is the politics of the Republican Party and Donald Trump's administration have already got a leak in it, and we'll see how long that boat floats. The reality too is that this is only the first 50 or so days. I mean, 52 trading days, and we've lost $3 trillion to the S&P. Now, I don't know about you, but my 401k is not looking so great right now. And I think there are a lot of voters who could care less about what party is in the White House and care a lot more about their investments and how they're going to pay for their kids' college and whether or not their jobs, salaries keep up with inflation. These are the things that will define politics going forward. And this is a extremely rough start for this administration.
Well, salient take from Rick Davis. So this is all anybody's going to be talking about at the beer tomorrow night, on the soccer field this weekend, on the baseball.
Please go to my store, the-studio-reykjavik.com, and get the Boomer Boost. This is a powder. You get a big scooper. You mix it with soft foods or with filtered water, a smoothie, milk. It's up to you on how you want to mix it, but take it as your breakfast or for your lunch. You'll lose weight, and you'll get 68 very important nutrients to help to boost up your energy levels, speed up your metabolism. You're going to have a steady burn of energy throughout the whole day. It won't spike. You won't be tired. You'll have vitality. Take a look at the label on my store, the-studio-reykjavik.com. It's very extensive. It's the nutrients that you need. It will target multiple systems like brain function, your heart and vascular system, musculature, and again, your metabolism. And by doing this every day, you're going to help to improve your immune system. You're going to slowly bring your body into an anti-aging process. And it's going to help with your musculature. So please go to my store, the-studio-reykjavik.com. If you're an athlete, you can use this as a pre or post workout fuel source. All right. But ones that aren't athletes, you're going to benefit by taking this every day. Again, take it for your breakfast or for your lunch, and you'll lose weight and you'll have the energy and you're going to have the nutrients that you need. Now, it works really well if you stack it with the barley, but you can take the barley separately. It's up to you. The barley, you can get it in Gladiator barley or in heirloom barley. Now, what do you get in the heirloom barley? It'll help to detoxify your body, bring down inflammation, and soak up free radicals through superoxide dismutase. This is a high-density protein. You take a scooper of this a day, or a half a scoop a day, and mix it with soft foods, filtered water, smoothie. All right, take it every day for your breakfast or for your lunch. All right. Now, the difference between the Gladiator barley and the heirloom barley is that you get all the benefits in Gladiator barley as you have in the heirloom barley, but you also help with building up strength. All right. So you do some resistance training, you're going to gain muscle. This stacks really well with Myotrol, which I said earlier helps with gene expression to build up muscle. Now, you can take the barley, heirloom or Gladiator, and mix it with the Boomer Boost. And that would be your meal for your breakfast or for lunch. So you're getting high density protein and you're getting all the nutrients that you need for the day. So with that, by stacking this, you're going to help with your heart, you're going to help with your vascular system, you're going to help with your brain, you're going to help with your musculature, you're going to detoxify your body, you're going to bring down inflammation, that's going to help with your immune system, you're going to speed up your metabolism, you're going to have more energy, you're going to soak up free radicals through superoxide dismutase, and you're going to control your A1C levels. So you're gaining more muscle, you're getting the nutrients you need, and you're controlling your blood glucose levels. Really important. This is a super stack, all right, for you to get healthy. Now, you can mix it, the Boomer Boost, with the Gladiator barley or the heirloom barley. It's up to you. But again, the Gladiator barley helps with gaining strength. Now, you can take these separately, use discount 5, and you get $5 off. I also have a longevity box where it's called the Longevity Boost Box, where you get the Boomer Boost and your choice of Gladiator barley or heirloom barley. That longevity boost box is at a discount, built-in discount, compared to purchasing the barley or the Boomer Boost separately. And you can use discount 5 on top of that. I want these products in your hand because they work, they slow down the aging process, and you'll get healthy, control your blood glucose levels, get musculature that you need, and boost up that metabolism. You're going to have more vitality. You're going to want to move around. And when you do that, you're just going to have a better lifestyle. So please go to my store, get the barley, get the Boomer Boost, and help support my work by purchasing the products. And that's going to help support your health. It's a win-win strategy. So please go to my store, the-studio-reykjavik.com. If you spend $150 or more, you get a free gift until supplies last.
12% respectively, but the administration standing by these policies. Once again, they see short-term pain, sure, but long-term they expect to gain.
Pretty hard to tell how long that's going to be. Now, of course, we should remind everyone the tariffs haven't even taken effect yet. That'll be this weekend and next week on the 9th, kind of a 1-2 punch. There is an opportunity for some negotiations here. Scott Bessent saying earlier that we are starting at the top. He joined us right after the president's announcement on our extended edition last evening. This is the high point. We pull back from here, telling our trading partners not to panic, but some clearly are.
And also asking them not to retaliate, but we're already seeing some activity and at least the ideas around retaliation. The Canadian Prime Minister Mark Carney putting into place basically what the U.S. has done when it comes to autos. Any autos not from Canada will face a 25% tariff unless they are USMCA compliant. You also have in the European Union the French President Emmanuel Macron suggesting that the EU respond potentially harshly with anti-coercion measures that should be included. So we're still very much wait and see. The story is far from over.
That's for sure. And also waiting to hear what we get from China. The markets, however, are not waiting to find out.
No, they certainly are not. And Charlie Pellet has been tracking those for us. Charlie, obviously off the lows, but it's still pretty ugly out there.
Indeed. Steep losses for the Dow, the S&P, NASDAQ. You summed it up perfectly. Trump tariffs wiping out nearly $2 trillion from the U.S. stock market. But an interesting headline moments ago on the Bloomberg Professional Service, retail traders buying into the tariff rout, snapping up tech favorites. Still steep losses across the board. Some other key headlines you need to know at this hour. Economists are slashing their U.S. growth forecasts, also boosting their inflation outlook on tariffs. And car makers idling plants, rethinking prices as Trump tariffs hit. S&P right now down 212 points. That is a drop of 3.7%. We've got the Dow right now down by 1,265 points, a decline of 3%, and NASDAQ is down 851 points. The NASDAQ Composite Index down 4.8%. The Russell 2000 Index, so small cap shares down 5.6%. The 10-year at 4.04%, with the 2-year 3.73%. Gold down almost $30 the ounce now, $31.05. We've got spot gold down by 1%. West Texas Intermediate crude down 7%. $66.70 for a barrel of WTI. And Bitcoin right now down 4.5%. Bitcoin at $81,794. Just hours after taking effect, President Trump's 25% tariffs on imported cars are already reverberating around the globe. Jeep maker Stellantis plans to temporarily halt some production in Canada and Mexico. Ford has started offering steep discounts to keep customers coming to showrooms, and Volkswagen is warning dealers that it will tack on import fees for the vehicles it ships to the United States. Among those automakers, right now, Stellantis down 8.2%, GM down 3.2%, Ford down 4.5%, ADRs of Volkswagen down by 2%. Balance of power continues. We are on Tariff Watch. We got you covered here at Bloomberg, and back we go to Washington. Once again, your hosts, Joe Matthew and Haley Lyons.
All right, Charlie Pellet, thank you so much. Charlie running us through the market reaction to the news we got from President Trump yesterday, in which he picked kind of both tariff paths that we knew were under consideration when it comes to reciprocal tariffs. A blanket tariff on all of our trading partners to the tune of 10%, but also reciprocal rates, at least according to the U.S., on those that the White House is calling the worst offenders. And the president himself ran through what some of those numbers look like when he announced this from the Rose Garden yesterday.
This is Liberation Day. I will sign a historic executive order instituting reciprocal tariffs. China, 67%. We're going to be charging a discounted reciprocal tariff of 34%. European Union, they're very tough. We're going to charge them 20%. Taiwan, we're going to charge them 32%. Japan, we're charging them 24%. We will impose a 25% tariff on all foreign-made automobiles. We will establish a minimum baseline tariff of 10%. Promises made, promises kept.
Just a taste of the event in the Rose Garden yesterday. They have since put together a slick produced video that's on the White House website, almost like a movie trailer of what we saw yesterday. And so here they are. We've got our own, by the way, right here in the studio, because we do need to refer back to these from time to time, Kaylee. The numbers are pretty staggering. We have a pretty great panel for you here. The Best of Bloomberg with Sean Donnan, Bloomberg's senior writer for economics, and Anna Wong is with us, Bloomberg Economics chief U.S. economist. Great to have both of you here. Sean, we talked a lot about this. It was, I believe, the 11th of March, your story with the headline, From Baseball Bats to Caskets, Trump tariffs set to hit home. Here they are. Was it worse than you thought?
Yeah, and that was just a steel and aluminum tariffs that day. And really what we saw yesterday was Trump go big, and this is the culmination of a decade's worth of political work. I mean, that really is, when he first came down that escalator in 2015 and announced his run for the presidency, tariffs and trade were at the center of it. And it's almost as if he's been frustrated in his efforts in his first term and what we've seen since. And this time around, he's coming out and he's hitting big. This is we don't like to throw it around here at Bloomberg, but yesterday was a historic day in terms of U.S. economic policy. This was the biggest increase in tariffs we've seen in more than a century. This is bigger than the Smoot-Hawley tariffs of 1930, which prolonged the Great Depression, set off global trade wars, and for a long time were this kind of cautionary tale for American presidents. Well, Donald Trump set aside all of that history and tried to make some of his own yesterday.
Well, so Anna, on that point, if we're using history as a guide, knowing that these tariffs are even more severe than the ones that Sean was just referring to, what should we expect in terms of short-term economic impact?
Yeah, so what we have right now is models and also 1 month of trade data so that we can, and also price data. So based on the models, and I will refer to the one that the Fed used in predicting the tariff impact from 2018, it would suggest that the GDP hit would be about 2.8% in total, with most of it hitting in the first year. And in terms of the core PCE inflation impact, it would be about 1.6%, with about 1.1% hitting in the first year. So that's what the model suggests. So now we have some actual data. We have February's import price data, and we have also PCE inflation data. Looking at the imports price data, I would say that it shows that so far the tariffs on China, we saw 10% increase in tariffs on China in February. We've seen that U.S. importers took on most of the cost. But there's still a distance between import prices and also what the final retailers charge, such as, the retailer Zara or Forever 21, right? So in terms of the core PCE prices, based on 3 months change, we actually have found a negative relationship between import exposure and actual price change. In fact, the apparels, furniture, stuff that we import a lot from China actually saw a decrease in prices over the last 3 months. And it's kind of counterintuitive, but I think that the reason is because a lot of firms have been front running these, so we haven't seen yet, at least so far, the inflationary impact if there were to be any. And second, also consumer sentiments in the U.S. have tanked, and they're just pulling back on anything discretionary, such as toys and books and and clothes. And I think, for anyone who's going on Amazon, for example, you could see that a lot of these goods that you're buying from China actually are seeing price discounts right now.
Sean, is there any way to quantify the front running that we've seen? Companies that have tried to grab as much material as they can, suggesting that it could be months before we really see an impact when they're going to buy new goods that are tariffed.
Yeah, look, I mean, we're going to be spending months trying to figure out what the impact of this is. Yeah, we've seen inventories build up. We've seen a surge in imports starting after the election last year, to try and get ahead of this. There were some smart buyers out there who knew something was coming. But, there's all these broader effects on the economy that are really, really hard to price in. One of the big things that's gotten markets agitated in the last couple of weeks has been consumer sentiment, right? That is not something that is an enemy, correct me, but I don't think it's something that's in a lot of economists' models in terms of the direct impact of these tariffs. There's this broader thing, which is kind of amorphous, but very real, which is uncertainty, right? We know back in 2018 and 2019, the Federal Reserve, when they were watching the U.S. economy slow down as a result of Trump's first-term tariffs, they were looking at uncertainty and its impact on business investment and hiring. And that actually turned out to be a bigger impact than the direct impact of the tariffs. Wow. So you stack all these things on top of each other. A lot of people in the markets and in business were hoping that yesterday was going to be the end of a period of uncertainty. We're extending that uncertainty. We're probably deepening that uncertainty in a pretty severe way.
So in that uncertain environment, and with payrolls data in hand that we'll get tomorrow, Chairman Powell is going to have to speak to the financial markets in less than 24 hours from now. How do you expect him to approach this, knowing he has very much said the Fed is waiting and seeing, we're not going to be too reactive, we can't predict for sure what the policies will look like. Now that we have a sense, how does he respond?
So I think Chairman Powell is in a pickle, because after the FOMC, he presented a very dovish voice, which was in huge contrast to the rest of the FOMC, who are more concerned about the upside risk to inflation. And since the FOMC, we have seen more of other FOMC policymakers who sounded way more hawkish concerned about these tariffs. So I think Powell may have to do a course correction, because since he last spoke, we now have more clarity about what these tariffs may look like, who we are tariffing on, what goods we have tariffed on. He cannot afford to waffle anymore or play the game. He has to get in line with the rest of the FOMC makers. So I think he needs to be surprisingly hawkish tomorrow.
All right, Powell's in a pickle, says Anna Long, Chief U.S. Economist at Bloomberg Economics, joined by Sean Donnan, who of course helps lead our economics coverage, Bloomberg Senior Writer for Economics. Thank you both so much for joining us. We want to add the voice now of someone else who, of course, pays close attention to these issues, the former ranking member of the Senate Banking Committee, former Republican senator from the state of Pennsylvania, Pat Toomey, is here with us on Bloomberg TV and radio. Welcome back to Balance of Power, Senator. It's always good to have you. If we could just be completely candid here, when you saw the figures presented in the Rose Garden yesterday, what was the first thought that went through your head?
I thought that he is carrying through on what he has always dreamed of doing. I spent 4 years arguing with President Trump about trade, about deficits, about tariffs during his first term. And it became clear to me that he has some very, very deeply held views. They're completely mistaken in my judgment, but they are very deeply held. And at the heart of it is this notion that if you have a trade deficit with another country, the amount of that deficit is a measure of the amount that they're basically ripping you off. And he uses that terminology. He speaks that way all the time. It, of course, makes no economic sense whatsoever. The trade deficit just means our consumers happen to buy more products from that country than their consumers buy from us. There are any number of completely reasonable reasons for that, but none of them are acceptable to Donald Trump. I think that worldview is kind of at the heart of this. I expected there would be some very severe tariffs. I, of course, had no idea exactly what levels would be imposed on which countries. You could see that was a pretty arbitrary and capricious approach. But I'm not really shocked by the magnitude.
What does this mean for business in Pennsylvania, Senator? It's good to have you back, by the way. And I realize you could have different answers here. We talked to a local brewer in the Washington, D.C. area who's perplexed. His back is against the wall because most of the materials he's using are suddenly now being tariffed. Or for a steel mill in Pennsylvania, might have a different answer.
Yeah, so there will be pockets of industries and companies that will benefit from these protective tariffs. They won't have to deal with competition. They can raise their prices. They don't have to innovate as much. The Americans may be kind of forced to buy from them. So there will be some that will have that benefit. But by far, the overwhelming majority will be the losers. Just think about the steel and aluminum tariffs that the president imposed in his first term. There's been a lot of research done on the effect of those tariffs. And the conclusion is for every job that was saved in the steel making industry, there were probably 8 to 10 jobs lost among companies that use steel. There's many times more industries that use these materials than the primary maker. And that downstream damage is very, very hard. Here's another thing to think about. Something like 40% of American imports are inputs for American manufacturers. So what we're doing with these sweeping across the board tariffs is we are systematically making American manufacturers less competitive because we're raising the prices they have to pay for the components of their products. The rest of the world isn't going through that. And so we will be at a competitive disadvantage. This is going to manifest itself in many ways. It's certainly going to be higher prices for consumers. It is going to be jobs lost. We've already seen announcements today of companies that are laying off workers. That's going to accelerate. And over time, it means a lower standard of living for Americans until finally, better sense takes hold and the process starts to unwind. But that can be a very difficult, and who knows how long that takes.
Well, but the White House is arguing, Senator, that this really is just step one of President Trump's economic plan. We still have tax cuts that they'll try to push through by the end of this year that they argue will help liven the economy. Obviously, your former chamber is taking steps to try to advance that legislative path forward in the next 24 hours or so as we expect a vote-a-rama to happen. To what extent will friendlier tax policy be able to offset the negative impacts you were just discussing?
Yeah, so look, I think there's 3 categories in which the administration is likely to pursue, and in fact is pursuing, really good economic policy, curbing federal spending. The federal government spends way too much money, and that would be very good for our economy overall if they're successful in curbing federal spending. Rolling back regulation. There's wildly excessive regulation. The Biden administration was very, very problematic with what it imposed across the economy. That rollback is constructive, and it is pro-growth. Energy dominance is really good for the economy. I think it's impossible probably at this point to quantify the relative components. But keep in mind on tax policy, I am 100% in favor of making permanent the 2017 tax reform. That's a very heavy lift. If we can get that done, that just maintains the status quo. It's just an extension of current policy. So there's not like a big surge to growth that comes from continuing current policy, right? What you do is you avoid a very damaging tax increase. But I really think that these tariffs are going to do a lot of damage.
I know you're watching these markets, Senator. Some things never change. You consider the negative wealth effect that this could have.
Yeah.
I wonder how worried you are about the potential impact on consumer spending, or if this market keeps dropping, if that's the one thing that can change Donald Trump's course on this.
I would hazard a guess that at some point it would, but if we're down 15% on the NASDAQ, I'm not sure where we are at the moment. It's been pretty volatile, as you know. But 10, 15% declines, I doubt that would change his mind. I think it's going to have to manifest itself in the real economy. I think we're going to have to see the CPI prints that are accelerating. I think we're going to have to see the layoffs and see the factories closing because they're no longer competitive. I think that's going to have to happen before the president decides he's looking for an off-ramp, because he really believes that buying things from other countries is really bad for us, and he wants to curb that.
Well, what about your former colleagues in the Senate or in the House for that matter? Do you expect if they're seeing the, financial markets getting calls from constituents that they could maybe try to push back? We already saw the passage of a resolution with the help of 4 Republicans of a Democratic resolution condemning the Canada tariffs. Specifically, Senator Chuck Grassley is co-sponsoring legislation that would see Congress having to approve tariffs within 60 days or them be nullified. Are you expecting more to materialize on that front?
Yes, I just don't know how long that's going to take. That's one of the many disturbing ironies of this. Of course, all of this is completely inconsistent with the constitutional assignment of responsibility for trade to Congress. The president doesn't have this authority. And yet we sit on the edge of our seats wondering what the latest whim is from the president, who's exercising an authority that, in my view, he doesn't have. I think, a lot of Republican voters have the view that the president's only been in office for a couple of months. We got to give him his opportunity, have him enact his agenda, and give him the benefit of the doubt. I think that will only last for so long. And when that starts to turn, because people see really rapidly rising prices, their job is jeopardized, they're hearing about layoffs and the other adverse effects, then it's going to be obvious to members of Congress that this is a very problematic road we're on, and they may want to find a way to begin to reverse some of these effects. But I think it's going to have to show up in the real economy first. Unfortunately, I think it will show up in the real economy.
Really good to have you back, Senator. I know you're going to miss Washington when the vote-a-ramas get going again a little bit later this week, potentially in the Senate. Pat Toomey, former Republican senator from Pennsylvania.
Please go to my store, the-studio-reykjavik.com, and get the resveratrol. Resveratrol helps to soak up free radicals because it's an antioxidant. It'll help the health of the mitochondria and boost up your energy levels. It'll help with youthful gene expression and get rid of cells that are in senescence. So take resveratrol every day, stack it with NAD+, or ubiquinol, or even C60. To get the max benefits of resveratrol. Now, let's talk about C60 for a second. C60 is a very potent antioxidant. You can get it in MCT coconut oil, extra virgin olive oil, or in avocado oil. C60 is a molecule that's 60 carbons. It has to be suspended in an oil because it's lipid soluble. You take it on an empty stomach, take a teaspoon a day, every day. If you work out, take it before your workout. It'll soak up the free radicals and you will recover quicker if you take it before your workout. But take it every day, teaspoon a day. It'll soak up those free radicals, reduce the stress in the cell and your tissues. That means your organ systems are going to perform better, including your immune system and your endocrine system and your neurons. And by soaking up those free radicals, you're going to improve the mitochondrial health in your cells. You're going to have more energy. Now, for your neurons, you need very healthy mitochondria to be able to have the energy to produce the neurotransmitters and to have those neurotransmitters fired out of those neurons. So to improve the health of your neurons and your other tissues in your body, taking a strong antioxidant is really important. And C60 is a very potent antioxidant. Take it every day, a teaspoon a day, and what you're going to notice is your energy levels are better, your organ systems are performing better, your immune system is performing better, your brain function is performing better, your endocrine system is performing better, and you're going to have more energy and you're going to recover quicker from working out. All right? So please go to my store, get the C60, stack it with the resveratrol, the NAD+, the ubiquinol. Really important to take every day. It's the second pillar of this core protocol that I have. The first pillar is to take max 35 or max 14 to boost up your immune system. Take C60 for the second pillar to soak up those free radicals. The third pillar is to take turmeric, ashwagandha, and lignans to bring down inflammation and boost up your immune system. And the fourth pillar is the boomer boost to boost up your energy levels and your metabolism. That's a great core health protocol to build off of to slow down the aging process and to get healthy. So please go to my store, the-studio-reykjavik.com, and get the C60. Take it every day. Take a teaspoon of it a day. All right? And you're going to see lots of other benefits that people haven't seen. When I started taking C60, I was taking it, and about 2.5 months later, I didn't have to wear my eyeglasses. I was wearing glasses since I was 20 years old. I'm farsighted with astigmatism, and after 2.5 months or so, I didn't need to wear my glasses. And many people say that their eyes improve. So it's important to take it every day, and you're going to notice that over time that you're slowly healing your body, and you're reducing that aging process. There's an anti-aging effect that's taking place with C60. So please go to my store, the-studio-reykjavik.com, get C60, stack it the way I've been telling you to stack it, and you're going to get healthy. If you spend more than $150 on my store, you will get a free gift until supplies last. Use discount 5 and you get $5 off any order. So that's the transmission that I have for today. Please go to my store, the-studio-reykjavik.com. Thank you for listening on Rumble, on YouTube. Also, for the ones that were listening on X Spaces and watching on my website, the-studio-reykjavik.com. I greatly appreciate it. I will do another broadcast soon. Thank you for listening. Have a nice day.